Are there any excellencies? I'm not sure. Ladies, gentlemen, welcome to another of the series of quick-fire conversations at FII 2022, this time with Peggy Johnson, CEO of Magic Leap, an immersive augmented reality technology company. Welcome, Peggy.
Thank you, Frank. Thanks for having me.
We don't have long, so let's get straight into
Okay.
it. I see you've brought along a sample there of the product, and you can tell us all about that later. But first, the technologies have been around quite a long time, haven't they? But there are probably people out there, myself included, who do not fully understand the difference between augmented and virtual reality. Can you explain that to us?
Sure. I think you can think of virtual reality as a world with avatars. It's an artificial environment. You put a headset on, you're fully occluded, you're entering another environment. Augmented reality is you stay in your physical environment, you can see everything in front of you, and we very smartly put digital content into that world. I would say virtual reality is probably more focused on entertainment, and we're right now in the state of the technology more focused on enterprise and augmented reality.
Okay, so it's more than a Game of Thrones game.
It is.
Yeah? Excellent, good. Tell us about the role that Magic Leap plays in the metaverse ecosystem, if you would.
Yeah, you can think of us as this device as a window into the metaverse. So you put this device on, and we put digital content in front of your eyes. Your eyes have to be tricked into believing that digital content actually exists. So this might be digital, and I put it here, and when I look at it, my eye has to believe that. And so we map the world, we know where your physical layout is, and then place the content in front of it. And it's highly complex. The optics are very, very hard to get right.
Magic Leap talks about enterprise as its focus. What does that mean in layman's terms, and what does it mean for your customers?
So the state of AR technology right now, you can kind of think of it as the early days of the mobile phone, when they were slightly big and they were a bit more expensive. That's where we're at with augmented reality. But even with the state of the technology today, businesses can find an ROI in areas like training. So you can put this on, you can train companies in your employees in a much shorter period of time because you're physically in an environment for them. We've also got healthcare applications. Doctors can take the device into the surgical room and perform surgery. It's actually certified to do that. And so you have the patient in front of you, you might be doing a knee operation, and you can draw a digital incision line where the surgeon should put the incision. And so I believe it will very much change how surgery and the outcomes of surgery are delivered with augmented reality.
Okay, surgery, and what other areas?
Other areas are any sort of training, so defense is a big area. Right now, when soldiers are trained, they might come into a space like this and there's a lot of physical props. Now you can just have digital props and you can change the scenarios very, very quickly. There's a lot of cost to doing that in the physical world, but you can now put assets in front of the soldier's eyes that are all digitized, and you can record it and play it back. So there's actually a lot of additional benefits to augmented reality.
Okay, I get it. What other industries? We've talked about health, defense, some aspects of training. What other industries would use this?
Yeah, there's a company right now in the industrial environment, so factories, where you have employees who oftentimes don't have access to a PC. This is actually a PC on their eyes, and you still have your hands free to do your job. So for instance, there's a company in the Midwest in the US called PBC Linear. And what they do is train new factory workers, which, by the way, we're losing factory workers at a very high rate. And so they're bringing them on. They're giving them this state-of-the-art device. They train them on perhaps how to maintain a piece of equipment in the factory through the use of a digital twin. So the new employee can actually walk up to a device and there's a digital overlay on the device that can walk them through how to get that piece of machinery back online very quickly. And the company's found their training time has reduced from 3 weeks to about 3 days.
Right.
So huge cost savings in this.
Tell us more about this piece of kit, please,
Yeah.
Peggy. Well, you know,
So-
how would this typically be used?
So typically you can use this all day. We've thought a lot about the human factors. It only weighs about what a set of Bose over-the-ear headsets weigh. The field of view is a very important metric, and that is the canvas in front of your eyes on which you can put the digital content. We've doubled it from our first generation. This is our second generation product. The text legibility is awesome. You can hang any number of screens around you. So for instance, that surgeon can put the patient's vitals wherever is comfortable for them. It's built for all-day wear, and you can actually, if you wear glasses, we have optical inserts that you can put in to really customize it just for you. This is a compute pack. It takes the weight and the heat off of your head. You can just hook that on your belt or your waistband. And this is a highly precise pointer to pick something out of a list. But you also have input modalities like your voice. We can, through your gaze, because we know what your eyes are looking at, you can actually pick things out of a list. And you can use hand gestures, so a variety of input modalities.
Okay. This sounds rather more advanced than the Terminator.
It is. It turns us
vision,
into a
doesn't it?
Terminator.
Yeah, does it really? So, I mean, this is all very futuristic, but tell me about the real future. What should people expect from augmented reality in the next 2 or 3 years and then in the next decade?
I think in the next 2 or 3 years, you're going to see it deeply embedded into the enterprise space because there's an ROI that can be achieved. So companies will buy it, again, much like early mobile phones when they bought it for employees because you had an ROI. Over time, as the silicon integrates further and we can reduce the componentry, we'll get to something like what you're wearing, a glasses format.
Wow.
But it'll still have that highly immersive, augmented view of your world, but that'll then be the consumer format that we all want.
Okay, and that's the 10-year view or the
Probably
medium-term
somewhere in
view?
the 5 to 10 year view.
Okay. But within a decade, these glasses that I'm wearing could perform all the functions of that headset?
Correct,
Wow.
yes, for
Oh,
sure,
I see.
in a decade. Hopefully sooner.
We're here in Riyadh in Saudi Arabia. Tell me what all this has got to do with Saudi Arabia. Why are we here speaking about Magic Leap?
Yeah, so one of our major investors is the Public Investment Fund of Saudi Arabia. They've really taken a long-term view of the technology. It's been years in the formation. You can also think of it like the mobile phone, where it took quite a bit of time before we got it into this small handset form. But we're also introducing the innovation into the kingdom. We have in our partners Saudi Aramco, so that's been a couple-year partnership with them. Also, many of the ministries, as they work towards their Vision 2030 goals, they found this is a great device that they can begin to use for training, for education, and any sort of upskilling or reskilling.
Right.
And so it's going to be quite a tool for the kingdom.
So Aramco have used this for training or for other, practical applications in oil facilities?
We're exploring that right now. So we are working on solutions that can be built on top of the device that can help with that digital twinning and the ability to, to look inside of a machine, a physical machine, with the digital overlay on top.
Okay. And tell me, finally, how have you found the Public Investment Fund as a shareholder?
They've been awesome. As I said, they understand this is a long-term view to the evolution of the technology. They've been supportive, and they've really helped us with the engagement in the kingdom. So we've been thankful for their support.
Peggy Johnson of Magic Leap, CEO of Magic Leap, thank you very much. That was a fascinating conversation.
Thanks, Frank. Thanks for
a
having
lot.
me.
It was great.
Thank you.
Oh,
I hope so. Oh, yeah. Okay.
yeah. Hi. What is that
So,
drink? What? Oh yeah, pomegranate. Yeah. Can I have one of those? Is it cold? Oh yeah, lots of ice.
okay. How are you feeling?
Great.
Are we on? We're not on yet. Okay. Well, good morning, everyone, and thank you all for coming in. Marcelo, thank you for coming to see us and sitting down with me for about 10 minutes, they tell me. Not in 10 minutes, but in about 10 years, or just under 10 years at SoftBank, my guest, Marcelo Claurek, created around $60 billion of value for SoftBank. And he tells me that while at SoftBank, he got a little bit frustrated because they were investing about $1 billion a week, and very little of that was going to Latin America. And so SoftBank looked down the sofa and found some $8 billion and directed that to Latin America to make about an 85% return on that. Marcelo left, of course, SoftBank a few months ago.
Yes.
And has left many wondering what his next move is. Marcelo, I know that you are bullish on Latin America. In the interest of time, I'm just going to cut right through to the chase. What is the reality of Latin America becoming the new manufacturer for the world, replacing China?
So I think Latin America in that regard is incredibly well positioned, as we've seen in the geopolitical situation that we live today, out of which manufacturing cannot continue to be mainly sourced in China, and we see that a lot of companies are basically diversifying the way they procure, the way they manufacture, and then due to the proximity of Latin America to an important market like the US, suddenly Latin America will become an important place for supply chain, for manufacturing, for many goods. So from that end, I think it's definitely a tailwind for Latin America, the proximity to the US and a pretty stable economy. So it was hard to believe that traditionally Latin American economies were the ones that were regarded as hyperinflation, and Latin America for the first time was the first one to actually raise interest rates, where the currencies today are have not been battered like other currencies against the dollar. So I think Latin America is in a really good position as it relates to the future. One of the few times in the history of Latin America that I would say from a macro perspective is in a very good situation right now.
It does bring, I mean, the word Latin America does conjure up images of corruption, currency devaluations, political instability, inflation, and so on. I know you've just addressed that a little while, but how do you consolidate that into an investment decision?
So we look at Latin America as a place of opportunity. It was probably the place in the world that had the lowest percentage of investments of investment in technology companies and others against GDP. So that's why we thought it was a great opportunity. When you go back to Latin America in 2018, the total amount of venture investing was $1 billion. We deployed $9 billion a year later. And then today, Latin America in 2021, we had the most successful year with over $25 billion of capital being invested into Latin America. And for that, you've developed some pretty amazing companies. Few people know that the largest and most successful digital bank in the world was a bank that started in Brazil, a bank called Nubank. That probably one of the most well-known health and wellness companies, a Brazilian company called Gympass. Probably one of the best renter companies, a company called Quinto Andar, and so on. We can continue to provide, really good examples. And from that end, I think Latin America has a lot of opportunity. It has challenges, like other parts in the world. But I think when you look at the potential reward versus risk, I think Latin America is in a very good situation.
But there are challenges on both sides. On the one side, protectionism is a long-standing modus operandi for a lot of Latin American countries, not least of which Mexico, for example. And on the other side, trade agreements with the US remain, keep the barriers of trade quite high.
And I think so. If you look at Mexico, Mexico has enjoyed a free trade agreement with the U.S., and Mexico is probably, one of the largest suppliers to the U.S. So from that end. And then you look at Brazil. Brazil traditionally has been a protectionist economy, but on the positive side of Brazil, Brazil has a size. I mean, by 2050, it's expected to be in the top 6 economies in the world. So Brazil is a country in which you do local manufacturing to supply to Brazil, and Brazil had been an exporter. So I think from that end, I think a lot of markets are opening up, and the fact that U.S. is the main trading partner of Mexico, that definitely puts, Latin America. And I would say that in this divided world that we're living today, the U.S. is paying a lot more attention to Latin America, and I think Latin America is going to be a really good trading partner of the U.S. and a lot of the Western economy.
Brazil is coming up to a presidential election this weekend. What do you think? Anything that might threaten change the investment environment at the moment?
So I think Brazil has been in a very good trajectory, and I think whoever of the 2 presidents that get elected, if Bolsonaro were to get elected, I think they will continue with the same trend of privatization and bringing private enterprises to control, to take over and manage a lot of the state-owned enterprises. That has proven to be very successful. And even if Lula were to get elected, he will not have control of the Congress or Senate. So in this case, I would think it's going to be somewhere more in the center. So I think overall, like I said, I remain incredibly bullish in Brazil and bullish in Latin America. There's also another factor that's very important. Traditionally, Latin America has been a commodities market. And you look at the prices of commodities today, in many cases they're on an all-time high, and I don't see that changing in the foreseeable future. So suddenly you have a stable currency, you have governments that have been proactive at raising interest rates before the whole world raised interest rates. You have a controlled economy, and in addition, you have commodities at an all-time high. Few people know that, in Latin America alone, what is called the Golden Triangle between Chile, Argentina, and Bolivia, 65% of the world's lithium reserves sit over there. And as we're living in the midst of potentially one of the biggest technology changes, which means the electrification of mobility, I think Latin America is going to be incredibly well positioned as the largest supplier of lithium to the world, plus nickel, plus copper, and all that. So those things that traditionally were not I would say, fashionable, today they're a necessity in order to propel the electric revolution.
So post-COVID, fintech was a huge opportunity in Latin America. Commodities are presenting a future opportunity. Where else are these opportunities, both sectorially and geographically, amongst the countries of Latin America?
I think there's a lot, right? I mean, even when you look at fintech, Latin America remains with one of the lowest penetrations of bank accounts. I mean, when you look at a market like Mexico, less than 50% of the population actually have a bank account. We still is people transacting cash, so that presents an incredible opportunity to get fintechs that will propel the fast adoption of financial services. So that has been incredibly good. We've talked about commodities being something that's going to be quite important. And then more importantly, I would say manufacturing and supply chain. Right. You're having a lot of that move. So when you have those 3 tailwinds, I think it's going to be positive as it relates to the future of making Latin America, I wouldn't say, the premier place to invest, but traditionally Latin America were a place where people did not invest. And now suddenly it becomes, I would say, an attractive place for companies, for investment companies to have a diversified portfolio and to take into consideration Latin America.
So where are you investing?
So we're investing in a lot, right? And we're, obviously, I'm incredibly keen in lithium. As Bolivia, my home country, controls 1/3 of the world's lithium, which is the first time ever that a country like Bolivia is #1. So we're very excited as it relates to lithium. We are excited about bringing electric vehicles into Latin America. So we're contemplating potentially opening factories throughout Latin America of electric 2-wheelers and 4-wheelers, and continue our investment in funds. There's a lot of exciting funds being formed there's just so much opportunity. I always say when there are so many things are broken, traditional Latin American lacks in education, in health, in all the areas that technology is going to help fix. I think there's a lot of great momentum to potentially continue to invest in funds that will invest in technology companies.
They tell me time is up, but I have one more question. You're a great company operator, a business operator, obviously. You're a great investor as well, and you're a great fan of football. So what are your plans for Club Bolivar?
So I own Bolivia's largest team, and they continue to win. It's very good. We own a team in Spain, which is also in first division. So I think it's always fun to keep the competitive edge on that.
Are we going to see them in the World Cup?
Well, hopefully Bolivia will make it to the World Cup next round. It's difficult when you compete against Argentina and Brazil.
Yes. Thank you so much.
Thank you.
Thank you so much, Marcelo. Thank you all for attending.
I'm just trying to keep it on a track.
Great.
Well, good morning, everybody. People are probably going to get coffee and juices. But this is an extraordinary story which you are going to listen to. It's what engine number one, and not something which most of us think about, achieved with ExxonMobil in May of last year. As the headline said at the time, little hedge fund that shook big oil. Just 6 months old, managed 250 million in assets. You own just 0.2% of ExxonMobil, which is worth about 250 billion. Chris James was the brainchild behind what you achieved and what you did. Now, Chris, some people here maybe don't know quite what you did do, but you essentially created an earthquake within governance of ExxonMobil. Why did you do it, and what did you achieve?
Well, thank you for having me here, and it's great talking to you today. So at ExxonMobil, we started a campaign, and we had a vision off several of our founding principles. One of the visions was that engagement, not divestment, is how you drive change. The second of those is that there is a link between sustainability and value creation. And at the time, a lot of debate around climate change, a lot of debate around ESG was not driven around value creation. It was driven around ideology. We felt that the way that we could create value was by working with the company to make their business more sustainable. And that meant a better governance situation, and that also meant taking advantage of the opportunities of decarbonization instead of assuming that it wasn't going to happen. And we felt that with the proper governance structure, and we did win 3 board seats on side of ExxonMobil, that with a proper governance structure, with the assets that already existed inside of the company, that we could both drive impact and value at scale.
Now, don't just slip past that. 2 directors on the board.
Actually, 3 directors.
3 now. You got it.
We won 3 at the annual meeting.
The third one was a week later, I think, wasn't it?
And when it was when the votes were finally counted.
What I don't want to do is slip past that, getting 2 directors on the ExxonMobil board when the chief executive did not want them, and he did everything to convince those who had to vote that they should not be accepted?
We had a broad, obviously, swath of investors that felt that change was needed, that we won a very large percentage, over 80% of the active vote. We obviously won votes from each of the big three in the United States, and it was driven by value creation, and they felt there needed to be change.
Yeah, but how did you achieve that? You know, getting 2 on the board with Darren Woods, the chief executive, phoning people, phoning significant investors saying, don't do it. In other words, you defied him.
Well, I think that there was a lot of frustration with the management team that the spending was not driving value, and that they were spending for growth and not spending for returns. And so we were able to build an argument that brought in multiple different stakeholders, and they believed that change was necessary, and that at the time, the argument was actually fairly straightforward. There was no one with energy experience on the board of ExxonMobil. And that is a remarkable fact, and I think everyone believed that they would benefit by having someone, and in this case, 3 members of the board with energy experience to drive both accountability and to drive value going forward.
But you were driven by company returns consistently disappointed shareholders over 10 years.
Yes.
What were you trying to achieve under the mantle as well of sustainability?
Well, I think that the linkage at the time was not clear, but there is a strong linkage between both governance and ability to adapt to change, and how adapting sustainable practices actually drive value. As you think about what sustainability really is and what does it do, it drives both resilience of a business model, it drives durability of a business model, and over time, durable and resilient business models create more value. And you had a situation where society at large wants to decarbonize. So having a strategy that aligns with effectively your customers, I think makes a lot of sense. However, the industry itself has been under attack for over a decade. And I think that drives, over time, a culture that can be quite insular. And we have a view that this isn't about blame, it's really about responsibility. And going forward, I think to align your business practices with the direction the world is heading, it just makes common sense, and I think all investors are able to see that.
But in those few days back in May of last year, do you reckon you shook the beast or not?
Well, I don't think anyone saw this coming. And I don't think anyone imagined that a incredibly small fund could win 3 board seats on the largest oil and gas IOC in the world. I don't think anyone saw that coming. But
including within ExxonMobil?
I think, obviously I don't know for sure, but I'd be surprised if they thought they could lose at the time. However, the investor frustration had been going on for quite some time. And that's, I think at the end of the day though, I do give credit where credit is due, and the management team has made a fairly hard pivot towards changing business practices. This is a company that barely mentioned carbon, that today one of the 3 pillars of their business is the low carbon solution business. They brought in an outside CFO. They brought in someone outside to run the low carbon solutions business.
Do you think that was because of what you achieved as engine number 1?
This all happened after the campaign. And I think that all of these have seen incredible, and the most unreported part of this is of course that Exxon has outperformed its closest peer, Chevron, by nearly 70% since the campaign started. Now that's over $100 billion of outperformance, of pure alpha that's happened because, I think because of the campaign.
I said it at the beginning, engine number 1, 6 months old, 250 million in assets only, just 0.2% of the shares. What do you think the lesson is from what you've achieved? Because there you were, I was sitting in London, yes, reading this stuff, right, in the Wall Street Journal, and also on the front page of the FT as well. You made incredible headlines because of the precedent you seem to be setting.
I think there are some very actually broad lessons. One of the broad lessons is that a really strong argument that can bring in multiple stakeholders can actually have a huge impact. I mean, this really was the power of an argument. It was the power of logic. It was the power of pulling together multiple people to believe that there was both a way to create value and to decarbonize the company. And when you do this, I think that is that is the perfect storm, and that's how you build large-scale consensus. I mean, even to the theme of this conference, I think that you can build consensus if you take a very logical approach, non-ideological, to driving value.
And what have you seen in the change of the leadership? I mean, Darren Woods is still the chief
Yes.
executive. Has he had a rebirth? Has he understood something which he was determined to stop?
Well, again, I think being inside a large oil and gas company, it's a very insular culture. Your interaction is mostly with people with very few stakeholders, and so I think that what happened actually shook the board, it shook management, and I think what we have seen since then is a pretty hard pivot towards how do you create value during this transition, and the decarbonization is they now see as an opportunity, not as something to be just afraid of, and I think that's why we've seen such strong outperformance, and I give them credit for making such a strong change.
Now, since you've been involved in other activist projects involving Vanguard, BlackRock, California State Teachers Retirement, Church of England in Britain,
So they were all supporters of the Exxon campaign.
and New York State Common Retirement Fund.
They were all supporters of us during Exxon. We've been working since then on other projects that we think play a big role in decarbonization. And we've talked some about General Motors. We think generally there is no shared reality of what decarbonization and what the energy transition looks like. And in doing so, we think that by there not being a shared reality, it's created an enormous amount of opportunities to add value and provide value for companies that actually can be first movers in their markets.
Would you do this again, Chris, in the way you did it?
I think the way we did it is what we're most proud of, is it wasn't personal attacks, it was truly the logic of the argument that won.
Is that respected, do you think, in business?
From the business leaders I have spoken to, I think that everyone appreciates the fact that this was around business logic, it was around driving sustainable business practices and driving value, instead of it being about a single person or certainly anything that had to do with, there were phenomenal people on the board, but there was missing something. And that missing something was having people with energy experience who knew how to create value during the energy transition. And I think that's the hole that we filled. But aside from that, there are to this day still really talented people, not just inside the company, but on the board.
What's been the impact on ConocoPhillips, Pioneer, and Devon?
So we worked with a lot of large US oil and gas companies to define really what good looks like. And I think this is important for the oil and gas sector. For us, the biggest impact you can have is around scope 1 and 2 emissions in the short term. And the biggest impact within that is methane. And methane and those three companies joined what's called the Oil and Gas Methane Partnership. And that is a partnership between United Nations and Environmental Defense Fund. And those companies took a leadership role in defining what good looks like. And I think fossil fuels are going to be here for a while, but we have to do it in a responsible and sustainable way. And a big part of that is outside verification of emissions, which is what happens in OGMP, and bringing down scope 1 and 2. And I think that's what they're doing, and I applaud them for that.
We're almost at the end, sadly, but you have made it clear you now want to work with companies, not be activist in the same way.
Well, I think we're active, and we call ourselves active owners. Activist has a brand and its own connotations that I think we wanted to move away from. We do feel that we need to work with management teams to help drive value, and in most cases now, I think primarily because of the win with Exxon, companies are willing to work with us, and that's what we want to see. I will obviously never say never, but I think that right now we see the opportunity set with working companies and helping them decarbonize and drive value while they're decarbonizing.
But are there some who, when they see you or Engine One mentioned, they run scared?
I don't know about run scared, but I think in the back of everyone's mind, it's just obvious that there's always a chance that we do something. I think we work really hard to try to build trust with companies. But at the end of the day, I think that the win with Exxon will always be a part of our history, and it certainly partially defines us. And I think we should be proud of that and not run from that idea. I think what we did was really awesome, and I think we drove an enormous amount of value and impact at scale. And scale is a very important concept here that most people don't fully realize. I think that this opportunity, though, is in owning decarbonization and owning emitting assets and owning companies that can play a role and drive value when they decarbonize, that's the real opportunity. And once we get past a lot of the ideology tied to some of the decarbonization ideas that are out there, we move towards where value is going to be created, and I think that's that's where it will be created.
Chris, postscript here. You once tried to buy a coal mine.
I actually built one right outside of my hometown. I grew up in a coal mining town. My wife and I both did. Her father was a coal miner. It was and I think watching that industry, it was a very impactful thing for me.
Chris, thank you very much
Thank you,
indeed.
Nick.
That's a lot in 10 minutes.
It is a lot in 10
appreciated.
minutes.
Thank you very much.
Okay, cheers.
Hello. So, hello, good morning, and thank you all for joining us today. I've got 10 minutes to talk about what's happening in the US economy, and I'm very lucky to be joined by two gentlemen who are rightly positioned to do so. So there is a growing concern about that the largest economy in the world could be on the verge of a recession. That is literally 2.5 years after the last one. During this conference, we have discussed so many headwinds and challenges that the world is facing now. And I think on the top of the list is the slowdown in the American economy. Definitely the fiscal policy, the tightening fiscal policy of the Fed, and the high inflation rate, and of course, the long-term impact on the rest of the world. So let me introduce my panelists first. Frank Bruno is the CEO of Cerberus Capital Management, and Joshua Friedman is the co-founder of Canyon Partners. Thank you, gentlemen, for coming along. And let me start, Joshua, with the first question that probably on everyone's mind nowadays. How hard and how long the Fed will be able to keep the foot on the brake?
It's a good question, Lubna, and it's hard for any of us to project human behavior. But I would say I don't think the Fed chair has a great deal of confidence in the data that he gets from his staff because he missed inflation so badly. Either that or he doesn't trust the analysis of that data. But either way, I think the Fed has to be able to see the whites of their eyes before he takes his foot off the brake, and that means he has to see actual easing of inflation. Now, one of the problems I see is I think that market analysts and in the popular press focus just on the Fed. The inflation isn't just because the Fed didn't have its foot on the brake earlier. It's also because of wanton spending by the Treasury. And the Fed can't really do anything about the lingering effects of that incredible amount of spending that took the US debt up as extremely as it did. So I think the Fed is likely to probably oversteer. I think they're doing it from an economy that is relatively strong with extremely low unemployment and extremely healthy banking system. So I don't necessarily see that as a defining moment that's going to throw us back to 15% unemployment of 2020 or 10% or 11% unemployment of 2008. It's just the Fed is trying very hard to make very pessimistic announcements about inflation to get consumers to do the work for it. In other words, if consumers pull back their spending, if companies pull back their hiring, then the Fed doesn't have to be on the brake for quite as long. So they're hoping they can jawbone the market into doing some of that work.
I will go back to the point you raised about the recession, but before that, do you agree with Joshua that to cure inflation, it's not only the job of the Fed, it has to be probably partnering up with a proper fiscal and policy, and as he said, probably the markets can help as well?
Yes, I think if you look at 08, 09, the fiscal plus monetary response was about 20% of GDP. If you look at the 2021 response, fiscal plus monetary was 60% of GDP, completely beyond what was required. So I think we're paying that bill now with very high inflation. We see through a few hundred companies we're exposed through credit and private equity.
So you think it was a poor management by the government?
I think it was an overreaction. I mean, in the very early days of COVID, none of us knew how bad COVID would actually be, so it required an emergency type response. But even after we had data suggesting COVID was going to be manageable, there was far too much follow-on fiscal and sustained monetary. And I think that's why we are where we are in a difficult spot.
Over the weekend, there were whispers that there could be a potential moderation in the tightening. What would actually push the Fed to pivot?
I think having made the mistake they made, they'll need to take rates up probably 5% zone, but keep them there. The market is like the dog ringing the bell, wanting some more Fed food, and I think this time the market's going to be frustrated by a sustained period of higher rates. A lot of credit was very poorly originated in that era of monetary excess, and I think a lot of bills will be paid with credit failing.
Joshua.
I would just add to that, and I, by the way, I think that's probably just behaviorally, if you look at human nature. I think the idea of taking it up to a level and keeping it there for a while and seeing what happens is important. I'm not sure that taking inflation down to the target rates that they have, even if they're above the old 2.5 number, is necessarily the best idea. When you have an unsustainable amount of debt that you've taken on at the federal government, in addition to unsustainable amounts of debt at state governments, to some extent, the easiest way to get rid of that debt is to inflate your way out of it as opposed to tax your way out of it. It also leaves much longer term effects. You're asking about the effect of that on a recession. There is a longer term sort of what I would call a stagflationary type of effect that's determined because when the government's carrying as much debt as they're carrying and rates are as high as they are, they don't have a lot of money left in the till for other things. So you won't be able to have the same kind of stimulative federal spending that you've had in the past. You asked a bit of why did they do that? Well, part of it was the immediate crisis, and part of it is that politicians in the U.S. are enormously short-term in their outlook. They have
is
to
it
get
fair for the next administration?
It's the reality of it. People have to get reelected. So if you have a crisis, they'll spend all the money they can and let it become somebody else's problem. Well, now we've got a lot of somebody else's problem, and it's going to linger with us, in my opinion, for quite some time.
Can we avoid a recession in the U.S.?
I don't think so. I think we're headed into a recession, and I think one of the concerns this time is China has a big property market problem, much slower growth. Europe has a combination of demographics, a shrinking population, an enormous debt load, so will require a great deal of finesse to navigate through. I think they go into a deeper recession. So it's the combined recessions that I think could make it more difficult.
What shape will that recession take, in your opinion? V shape, W, U?
I think this one is more likely to be like an early 80s recession, a longer recession than the V shape that the market has gotten very used to.
Joshua?
Yeah, I don't think it's going to be nearly as severe as some are projecting because I think we're starting from such a position of strength. We have a banking system that has less leverage than it's had in decades. We have consumers who are in better shape than they have been in decades in terms of 3.5% unemployment as opposed to the kind of numbers we've seen in the past, and in terms of their savings relative to their wages. So I think that what you will have is an inflationary environment. And by the way, maybe that's not so bad for the longer term picture of how big a burden in real dollars the government has to bear.
Why?
And maybe it's not so bad if inflation addresses maybe a misallocation of capital toward capital as opposed to toward labor, because maybe it rectifies that a bit. But it also, inflation is sort of a cruel master in that it affects some businesses quite differentially from others. Real estate right in the target
Yes.
because of cap rates. consumers in certain specific areas if it comes through things like energy, et cetera. And Europe also did something else, which is they made themselves super dependent on Russia, and then you had something kind of a bolt from left field. And I think because of technology and because of information and because of the internet, they became very much just-in-time reliant on things from China that aren't necessarily going to show up just in time. So we have a vulnerable system globally. I think Frank correctly points out the complexity when you have multiple recessions of different magnitudes taking place at the same time, and particularly at the same time as China seems to be maybe taking a little bit of a step back from the world.
Joshua, an honest question. Do you think really what the Fed is doing is actually cold tightening? Don't you think the policy now is very accommodative?
I think they need to do it right now because they erred so badly in the past. But in terms of, but I think it's a bit crude. They say they're going to be very data dependent. They can't be data dependent on the kind of data they were looking at in the past. And I think they can't do the job themselves. And I think the targets they have may be inappropriate. So I'm in a kind of a wait and see in terms of my confidence in the Fed leadership.
How far the Fed can go in order to slow the demand and probably not cure completely the inflation, but at least bring it down a bit?
Well, there's been a lot of discussion that historically, when you have inflation as high as we have it now, typically the Fed funds rate has to exceed the inflation rate and stay up there for a while. I think that that's possible, that will be required. So I think we're going to be in for a difficult set of market conditions for a couple of years as a result.
I'd add one point to Frank's, which I think core inflation is quite a bit lower than these headlines, in the sense of non-transitory part of it. If you eliminate some of the supply chain, you're probably closer to 5 or 5.5% today. But still, that's a pretty high number.
It's very far from the 2% target. Let's talk a little bit about the credit markets. Where do you think they're heading?
Sorry, which markets?
The credit markets.
Oh, the credit markets. Well, I think the credit markets in many ways anticipate other markets. People talk about high yield spreads being only 550 basis points, although off a lot higher base than they were, and therefore have potential to expand. Maybe. I think that's probably true, but I also don't think that that number is really indicative of where things are trading. Where trades are taking place, they're taking place much, much wider. So I think the adjustment that's already taken place is quite enormous in certain areas. Credit markets tend to be less liquid and more technical in some ways. We had a decade of inflows into mutual funds that produced buying. Buying produced prices that went up. Prices produced more buying. That virtuous cycle is now a vicious cycle. And money's been redeemed from high yield mutual funds, causing selling, causing prices to go down, and so forth. So we aren't at the point of seeing great new distressed opportunities yet, but we are at the point where there are many, many, many more distressed pricings of actually pretty good credits. And I guess I would say if you look at the upside versus the downside of buying certain credit securities versus buying equity securities, I would say you have less downside and more upside today off 80-cent price debt than you do off average equity prices, given what the Fed's likely to do.
There's two more questions that I would like to ask before, because I think we're running out of time. But two things. One, dollar dominance. Do you think we will see a different currency as the reserve currency of the world, or it's going to stay forever, and why?
I don't know about forever, but I wouldn't say anytime soon for lack of alternatives. I don't think the euro has many issues. The yen has many issues. China's currency doesn't float, so
you don't see an alternative.
I don't see an alternative, and I also think the U.S. A lot of people are writing about the problems, but top 50 market cap companies in the world, 36 are in the United States, 3 are in China. So I think there's a long way to go before we run out of innovative power, and the dollar remains as the global reserve currency for lack of an alternative.
The pound looks bad, the yen looks bad, China's looking inward. Crypto hasn't looked so great as a store of value lately and is highly volatile, so I agree there's no alternative. On the other hand, inflation is a way of eroding the value of the dollar. That's the adjustment mechanism.
Mm-hmm. Will China be able to surpass the US and become the world economic engine and the largest economy of the world? Last question, because he's telling me time is up.
I don't know when that happens or how it happens. They've got an enormous population, a huge inventory of technological skills, but they also have a system that isn't necessarily designed to elicit those skills in economically efficient ways and to lead the world in them. And they appear to be pointing more inward these days than outward. So maybe that means that the time frame for those types of issues is much longer. If people want a safe haven for their capital, they're still seeking the U.S. And I think that's just an enormous asset that the U.S. should be very, very careful not to squander.
So yes, no?
So I would say not in the immediate future.
I would agree with that. You have to be a magnet for global talent to be the leading economy. And I think China is not that today.
So the answer is no. Thank you very much, gentlemen, for sharing your experience and thoughts. Let's give them a round of applause, please.
Thank you.
Tony, good.
Assalamu alaikum. Good morning. We still have a few minutes while it's still morning. Today we have a session to talk about technology and education. And we would like to welcome Mr. Robert Smith,
Thank you so much.
the chairman and CEO of Vista Equity Partners, to this edition of the FII. Vista, I'm not in the investment business, but now I've gotten to know the background of Vista, but you'll hear more from Robert.
Sure.
It's one of the world's leading technology investors and pioneer a sector-specific approach to investing with a focus on the power of enterprise software. Robert is also known for his work to bridge the digital divide through his investment platform as well as his personal dedication to expanding access to education and establishing on-ramps to opportunities. He is empowering everyone to participate in our global economy. Robert is the chairman of Carnegie Hall and the chair of the Robert F. Kennedy Human Rights. He serves on the board of directors of the Business Roundtable, the board of overseers at Columbia Business School, and is a member of the Cornell Engineering College Council. Named by Forbes as one of the 100 greatest living business minds. Robert, I'm thrilled to be speaking with you today. Thank you for being here.
Thank you. Thank you for you all coming and attending, and it's good to spend time with you.
Yeah. So let me throw out a few questions.
Sure.
Let me start with, as I said, I was not familiar with Vista because I'm not in the business.
Yeah.
I assume most of you are. But still, this is a good opportunity for you to tell us about what Vista is about and so on.
Sure.
Please.
Really high level, because I know we want to dive into this whole question of education and how we really empower our globe and our people to participate in this fourth industrial revolution more fully. We focus on enterprise software. We are the largest investor in enterprise software. We've done now over 580 transactions. Again, we do one thing. It is the business-to-business software, typically buyouts. We now have over 330 million users of our software in 180 countries, and aggregated we're about 86 software companies today, which make us about the fourth or fifth largest enterprise software company in the world. So
Amazing.
That's what we
Amazing.
are. That's what we do.
So let's talk about technology, because
Yeah.
that's one of the two topics, right? Technology and education. Now, you've been a long-time advocate of the opportunity that technology provides to individuals, communities, and also the world at large.
Right.
However, given the advent of AI, machine learning, everybody's talking about it. I'm sort of in that field myself.
Right, yep.
I know everybody wants those people, and there's a
Right,
shortage
sure.
of those talents.
Right.
And the salary and so on, compensation, getting bid
Right,
way high. So what do you do about it? How do you?
Well, there's a couple things you and I talked about. I think again, the most scarce resource and frankly valuable resource on this planet isn't oil or lithium or cobalt. It's actually software programmers. There's about 8 billion of us on this planet. There's only 29 million of us who actually write code for a living. And if you think about it, it is powering every single industry. It is transforming every single economy, but yet so few people actually do it professionally for a living. And in fact, we're actually increasing the gap in the number of available opportunities versus the number of people who can actually fuel it with their brains and talent. And so a big part of, we're talking the last couple of days about this world order, this new world order. Well, it's going to be those economies, those countries that enable their citizenry to more fully participate in the next generation economy who are going to win at the end of the day. So that really means investing in the future, investing in humanity, investing in kids, and investing in platforms that actually now develop and deliver high quality talent, educated talent across every single industry, from agriculture to oil and gas production, whatever it might be. So you and I have talked about this, being a computer scientist yourself. The way we have distributed computing power and the connectivity of it has changed the face of the planet in so many good ways, but we aren't necessarily embracing that as fulsomely as we should and as we could. And leader nations will enable their citizenry and enable their regions actually to be more fully participating in this opportunity set. So that's the dynamic that we're living in today.
Yeah, let me throw something out. So, I'm a computer scientist. When I was a young professor, I was at Yale. I taught programming.
Right.
To 200 freshmen or sophomore. And some of those are probably leaders of this software thing. So I know what it takes to be a programmer.
Right.
But not all the programmers are the same.
Right, exactly.
So what does Vista do that help provide the technical skill? There are a lot of coding academies around the world. You go there, a boot camp, 6 months, then hired by you and your firms, right?
So there's layers to this, right? And on the one hand, you will have necessarily people that you taught at Yale who might be, systems programs,
years
et cetera.
ago. Yeah.
But one of the things we have found is that, brains aren't necessarily, relegated to certain schools or certain communities. It's often just a function of the opportunity. So we have aptitude and personality profile tests that actually fuel a large number of people. In fact, about 500,000 per year that we then put through our process and ultimately, determine is about 25 or 35,000 that we can now, that are hireable within our community. And we do, I call it a lock and key type systems, where we test our best programmers and their profiles versus people who are coming in and saying, you might be a good programmer, or guess what, you might be a good systems analyst, or you might actually be a good person in services based on those profiles. And we found that distribution and that opportunity pretty much exists about the same almost in every community. It's just a function of do they have access to it. So a big responsibility that we all have as community members who want to invest in humanity is make sure the youth have access to broadband, who have access to computing power. And part of the Edison Alliance, we're actually now looking to make sure another 1 billion people have access to the internet by 2025. So those are important elements of what we do.
You and Vista are providing the infrastructure to enable this scale.
Right.
Is that correct?
Part of it. Part of what we actually do is actually provide the business opportunity for these folks who we've identified would be good programmers, or actually people who work well in enterprise software companies, to now come participate in that trade. Part of what we're doing here in Saudi is ensuring that we have the relationships with the government, with the ministries, with the companies here, that we can bring our infrastructure here so we can enable a number of citizens, including Saudi women in particular, to now participate in this economy. So that's how we think about it.
All right, great. So let me turn to the other topic, right,
Sure.
which is education, technology and education.
Right.
I'm an educator. So I know in my heart, education is a component of the overall ecosystem. You talk about STEM. You cannot start at a college.
Right.
You have to start when you're kindergarten, really.
Right.
And then you cannot stop after you get the college degree. You have to continue. Mm-hmm. And now with help by COVID, you can learn online. There are many things online. So in a way, it's a continuing process.
Right.
So I know I've read up a little bit on you. You advocated this concept of, what is it called? cradle to career.
Right.
Can you expand on that? It sounds similar to this
Sure.
concept.
I mean, one of the big investment segments we focus on is education. So we have 4 companies that fit in kind of K through 12, 12 through 20, and then what we call continuing education. And K through 12, really, it's a platform, in this case, Power School, that actually delivers, I think it's not over 58 million students on the planet, and from learning management systems to systems to help administer and run the school district, et cetera. And then in the college level, EAB and Ellucian, many of which are actually here in the kingdom, that actually enable administrators and students to actually participate more fully in the educational experience. Then of course, Pluralsight, which actually does the training and development for cloud engineers or on-prem engineers.
What about beyond?
And beyond, that's the beyond.
Career,
right?
the career
So
part.
when you and I were graduating, you could go learn a language and that would last for 20 years. You know, you learn C++ or whatever it might be. Today, the cloud is evolving at about 10% a month in many respects. And so whatever skills you learned last year, only 40, 50, 60% are applicable this next year. So you have to constantly learn and train. So you have to invest in an infrastructure for ongoing education for your developer community in order for them to participate in the next generation of applications or infrastructure that get rolled out.
Thank you. I have one more question. The time's up.
Yeah, sure.
By the way, I taught Fortran. For those of you
Right,
who
there
know
you go,
Fortran,
Fortran.
okay.
Right,
So,
right.
but okay. So sitting around here, probably a lot of investment professional experts. What's your message for them? How can they participate in this?
I think, again, it is simply put, the consumption of software continues to accelerate beyond almost every industry. It's the most productive tool introduced in our business economy in the last 50 years, likely will be for the next 50. You talked about artificial intelligence and machine learning, and that's all software, okay? Those are accelerants on what I call the basic substrate of enterprise software. So understand we have to invest in humanity through investing in systems where our children, our communities can participate. And again, the community, the country that does that best at scale is likely going to be the winner, and if you want to call it that, or actually have the ability to participate and create a more wholesome community for their students, for their citizens.
Thank you. I think it's a great positive note to end the session
thanks,
with.
Tony.
Thank
Good
you
to see
very much.
Thanks to be here. Thank you.
Thank you. Do we know someone was taking a photo? I know there's a part of the perk.
The extremely riveting panel that we have lined up for you today. We're going to be having a conversation about China and the next phase of globalization. And with us today, I'm honored to introduce Lara Cha. She is the chairwoman of the Hong Kong Exchange. And we're going to dive right in because I have lots of questions.
All right.
As I'm sure so does everybody else. So I'm going to try and ask the questions that you all have. For starters, this topic was in the headlines this week. The market response to the Communist Party Congress has been poor. Does that reflect business investors' view that Xi Jinping's strong political grip on power could mean a poor investment in China?
I think the market response indicates an uncertainty. I think any time when there's big news coming out of China being one of the largest economies in the world, it got to have an impact on the market. And I'm sure that as people digest the news, the market will recover. As we all know, market goes up and down. But I think the important thing to note is from the Party Congress report, the president has said that the opening up and the market reform in China will continue. I think that is a message that I think we should focus on. China's economy just recently announced the record of 3.9% GDP growth, which is of course lower than the 5.5% that people have expected. But given the size of the economy, 3.9% is a respectable increase. So I would say that investors should look at the fundamentals. Right now, what is troubling China's growth, obviously, is the COVID policy. I'm sure that as we get out of the pandemic, when things return much more to normal, things will pick up again.
What if things don't return to normal?
Well, it's hard to say, right? I mean, things do happen, and I can't see why things would not go back to normal. I mean, also we need to define what is normal. As we all know, after the pandemic, the return to normal anywhere else is not the pre-pandemic normal. So I'm sure that China, like other markets, like other countries, will find its equilibrium. And the potential of a size of economy like China, it has to be going on. It has a large population. There's a domestic demand. All these those factors have not changed.
What does this specifically mean for Hong Kong, the latest headlines? There's been a long retreat by business investors after the crackdown on democracy protests and the new national security law in particular, and it seems like foreign investors may be kind of spooked. Are you seeing that, and do you have any concerns that the Congress last week could exacerbate this?
I don't believe so. It is true that Hong Kong has faced some setback in the last few years. I do believe that the national security law is something that people have digested, because when it's compared to other part of the world where they have similar national security law, it isn't really not that bad. If we compare with the Homeland Security Act, the Anti-Terrorist Act in the United Kingdom, etc., people have largely accepted and digested that news. Yes, we have seen the pandemic and the policy on very tight quarantine requirement has driven some people away. But again, we are coming out of that. We're beginning to open up, so people will come back. With regard to the impact of the Party Congress on Hong Kong, I think it's important to note that in July, on July 1st, on the occasion of the 25th anniversary of Hong Kong's return to the motherland, President Xi Jinping came to Hong Kong and gave a very important speech in which he said Hong Kong must retain its unique status under the one country, two system. Hong Kong's common law will be preserved. There will be independent judiciary as we always have. And these are very strong signals that the underlying factor for Hong Kong, for what had made Hong Kong great as an international financial center, remain unchanged. The transparency, the international level of regulation, we have a vibrant liquid market, Yes, we have setback, but the fundamental haven't changed. So, market move up and down, and eventually I think the equilibrium will be found.
So what message do you have to foreign investors who are wanting to base their businesses in Hong Kong and list on the exchange that you're in charge of?
First, let me talk about the exchange. We are one of the most liquid and vibrant markets in Asia. We had a large number of IPOs. For the 7 years out of the 12, we were world number 1. This year, we haven't done so well like everybody else. Everybody has suffered in terms of an IPO slowdown. But we have a very strong Connect program, which is connecting China with the world. Chinese investors can invest in our market through this Connect program. International investors can invest into China through the Connect program, and that is unique in the world. And as I said earlier, China will continue to grow. If you want to invest in the Chinese market, Hong Kong is the logical place to go, not only because of the Connect program, but because of all the other factors that come with it. So I would encourage people to come to Hong Kong to take a look and to see, that we haven't changed that much. We are trying to, open up and going back to the pre-COVID days.
So let's talk about the impact of climate change in China. This summer was extraordinary with, unfortunately, record heat waves and drought. And it seemed like this was a bit of a tipping point for the Chinese government seeing this issue. What does it mean in terms of business investment? Are you seeing the CCP Congress take steps towards investment in renewables, for example?
Well, I think China has done actually extremely well in the area of environmental protection and climate change. The commitment of 2016 in terms of carbon neutral was made, the pledge was made, and it's a serious pledge. And if you look at China nowadays, they have done a huge amount of forestation or reforestation in the last decade, and they will continue to do that. And now, if you look at renewable, China is the world's largest producer of wind turbine and the largest producer of solar panels. And of course, they are also not only just producing the hardware, they're also implementing it in the country. What will be needed in the next phase is to have technology breakthrough to make this renewable, to make the solar as well as the wind, that make it more cheaper and more accessible to not only to China but to the rest of the world. I would say that China's commitment in terms of ESG has become stronger than ever. And we saw that in the various initiatives, the government's initiative in different parts of China. And in Hong Kong, we're going to launch a carbon exchange very soon to capture the opportunities that come along in that area.
And finally, my former home, Washington, China is top of the headlines there. Right. Particularly because there are such high tensions between the US and China right now. How are those tensions, the tensions between US and China, affecting business growth?
I think on the one hand, there are Chinese companies that are delisting in the US, and some of them are coming to Hong Kong for listing, and we welcome any companies that is eligible, qualified to list on our market. It is true that in these days of very complex geopolitical tension, Hong Kong being a connector to the world, to China, we have to navigate very carefully. It is not easy. I think anybody would tell you in these days of mega tension, geopolitical tension, which is completely out of our control, our role is to maintain a steady, vibrant, and solid market. And that is what we will continue to do.
Well, I have about 1,000 more questions, but unfortunately our time is up, and I wanted to thank you so much for giving us your time and for everyone else for joining us. Thank you.
Thank you, Suzanne, for having me.
Ready? Hello, everybody. Thank you for joining us. We are speaking about the renewables crossroads. I'm Elise Labott, and I have a wonderful panel to discuss this kind of interesting period that we're in right now, where we're all talking about moving more towards the use of renewable energy. We're certainly not where we want to be, but we're certainly can't go back. In 2020, renewable energy use grew by 3%, predominantly propelled by a 7% increase in electricity utilization, according to the IAEA. And so the world is really crossing into a mass adoption moment for green technologies. We all know about this enormous economic, social, and climate benefits. But in the middle of an economic downturn and supply chain crunch, we're facing a lot of headwinds. So what does that mean for renewables as the world considers accelerating the green energy transition during the global energy crunch? Will these crossroads lead to further adaptation, or will it compel a return to the previous energy demand for energy in the near future? We have a wonderful panel to discuss that. We have Patty Panmathian, Vice Chairman and CEO of Aqua.
Thank you.
Thanks for joining us. Jaime Gulen, Energy Director of Mexico Infrastructure Partners. Sharif Foda, Chairman and CEO of National Energy Service Reunited Corporation. And Cynthia Zhu, CEO of Sino Energy International. Thank you so much all for joining us.
Thank you. Thank you.
Thank you.
All right, so Patty, let's start with you. How much is the cost of renewable energy generation affecting the pace of mass adaptation?
My view is I think we kind of crossed the kind of threshold, if you like, or the point of inflection. People can argue was some time in the sort of 2017, as far back as 2017, 2018, when all of a sudden, for a reasonable amount of energy that we consume, when the resources are available, so we don't get stuck with this, oh my God, what happens when the sun is not shining? There is no batteries yet. But for that amount of energy, and regardless of where you are, anything from 20% to, in this part of the world with air conditioning load, as much as 55, 60% of the energy we consume only during the day when the sun is shining. For that energy, around about 2017, 2018, you can argue about it, even in the lowest cost oil producing country in the world, Saudi Arabia, gas producer in this part of the world, there was no way that fossil fuel based energy generation was going to beat solar energy and wind energy. Okay, that happened then. And it has remained so. So we've carried on reducing the price. And that crossing point is what started to really accelerate the adoption of renewable energy. If it was so cost compelling, why would as energy demand kept increasing, so it wasn't even a case of retiring other assets, why would anybody then build fossil fuel based assets? And we saw it. We saw the massive shift immediately. It's gone on. So we got to a point before the current sort of crisis and dramas, we went on, we brought it all the way down in the Kingdom of Saudi Arabia, even on a renewable energy contract, 1.04 cents per kilowatt hour. Just to give a scale of context, average cost of energy across the world, it's tough to kind of calculate that, but I think people will recognize a number like 12, 13, 14 cents. Huh? When the sun is shining in this part of the world, we were able to start delivering energy at just over 1 cent. Fantastic. Okay, of course, it's now suddenly changed. Rampant inflation, interest rates rising, because it's all capital intensive. But yeah, so what? The 1.04 is now going to become what? 1.8? Shocking. It's a huge increase. But the 1.8 compared to 12, and by the way, 75%, the other point people need to recognize, 75% of the cost of fossil fuel-based energy is the cost of fuel. So during this period, cost of fuel has shot up as well. So that 12 cents is no longer 12 cents anyway. The good Lord doesn't charge us for that energy, so this 1.7, 1.8 remains 1.7, 1.8. So
obviously,
compelling.
the heavens agree with you.
Clearly.
Jaime, how fast is the world switching to renewables? I mean, we're talking about the 5% tipping off point drawing energy from wind and solar. When do you think the world will successfully cross that threshold?
When you ask about crossing that threshold, the 5%?
Yes.
Yeah. So, I mean, I think, we're having much...
Keep going.
Sorry, it's a little bit distracting, but...
It's a little distracting, but we're just going to...
We're going to power through.
Okay.
Power through it. Yeah. Go on.
Yeah.
No, I think, with the advances in terms of the efficiency, the cost of production, that's simply driving, an ability to actually deploy more sort of solar, wind, et cetera. So, with that, you're now in a competitive area where now it's a question of actually deploying that. Deploying that in places where you've got good radiation, deploying it in places where you have good wind resource, and also where you've got governments that are actually open and favorable to actually, promoting that. And it's not only governments, but it's local communities, because you require land in some cases. You are putting structures where people may not want structures. So to me, the limitation is not the efficiency, it's not the capital, it's not the need, it's really the political will to actually adopt it at a faster rate. So to me, that to me is the driving issue. And we see it in a place like Mexico. Mexico has one of the best resources, both wind and solar, yet our development has been limited by the government wanting to limit the growth of renewables vis-a-vis thermal or fossil fuels.
Yeah, I want to get to the government issue in a minute, because I really think, that's going to be the biggest barrier to green energy, right? Not money or even technology. It's going to be government policy. Cynthia, we've had this disruption in the supply chain. Talk about how renewables can improve the economic and energy stability and economic resilience through supply diversification, because resource-starved countries are considering the use of renewables to lessen their dependence on imports.
Right. So I think on this point, I would like to kind of break down into two perspectives. I think, first of all, there's no doubt that in the current environment, renewable energy definitely brings stability economically and politically. So that's what we're seeing in Europe and in Middle East as well. I think it's just provide an option for the economy and for the society to use. And secondly, the second perspective, I would like to bring in hydrogen, because we're in the hydrogen field. And that's what we see is developing so fast. It's kind of enabling renewable energy development as well. So that's what we call renewable hydrogen. So what does that mean? That just means that hydrogen is produced from renewable energy sources, such as solar, wind. We have seen that developing so fast for the past 6 to 1 year. And I think that trend will also bring in stability to the economy and to the stakeholders, because the cost of the renewable energy is coming down. The cost of providing energy or power generation is coming down as well.
Yeah, Sharif, so all experts, and we're talking here a lot at FII about how we're in this economic downturn, headed towards a recession, many predicting. How do you think we make that balance about higher upfront costs for long-term saving, which governments are now subsidizing?
Okay, so maybe let me just make a disclaimer first. So obviously I'm from the bad guys, right? So I'm working in oil and gas. So, and I think someone would ask, why are you here, right? So I think why I'm here, because I think we all need all energy sources to be able to cater for the demand that is coming. And I think with all the panels that you heard for the last couple of days, it's very obvious the issue is about lowering emission, and it's not about the source of energy, right? So, and one part that is extremely important is that the renewable energy actually has a huge source for it's extracting oil and gas. So actually, when we lower our emission and to extract, to get a lot of the gas to the world, we actually need a lot of renewable to fuel some of that field. And part of it that is important, as you mentioned, we don't have a problem with permitting of land. So actually, a lot of projects we can do, massive project. We have a lot of lands that we can put a lot of solar panel, that we can reduce enormous amount of emission, that almost 50-60% of the fuel that we need just by eliminating the diesel generator that we use in the majority of the refinery and all the stuff we do. So there is a lot of cost and a lot of synergy that we need to do over the next 20 to 30 years, because all these sources will be needed for the future.
But I mean, Jaime, so governments are balancing, having to put these upfront costs, which are expensive for the long-term savings, in the middle of an economic downturn. And as we said, the biggest barrier is not going to be, to money or technology. It's going to be government policies, developing that policy framework. Technology, jobs are going to be needed, education. How do we create a sustainable future with future growth, with further growth, and how much are governments going to be willing to commit to that?
Well, there's two pieces. I mean, just going back to the capital issue, I mean, we manage an infrastructure fund. We're the largest investor in infrastructure and energy in Mexico. We have a large portfolio in renewables and thermal. But I mean, when we talk to all our investors, the #1 item they want to invest in is renewables. So the capital is there. It's just, they want to make sure that there's a project where the government is supportive of it. But to me, what the government needs to focus on is, one, facilitating or having the policies to allow that private capital to develop the private renewables, which is there. The experience is there as well, and the technology, as we mentioned. But the other is actually they should be investing in the transition, right? Because when you're investing in renewables, you may be crowding out other sectors, and you may be needing to educate. You may be needing to support new industries or new businesses that will develop around the new industry. And that's where I think the government should be focusing their efforts. Let the private sector invest in the actual investments, because there's enough capital to do that. There's enough know-how, and in fact, probably better know-how than government in terms of implementing and deploying renewables. But I think government should focus more on making sure that businesses and people and communities are able to make that transition into the new world of renewables.
So Patty, I mean, if you look at some of these countries, and a lot of people talk about India, for instance, you have a young population, you have growth in lifespan, and the rapid spread of benefits of development in the smaller towns and cities, increasing expectations of better lifestyle that's affordable, but that could also act as like an impediment almost to the adoption of renewable energy, because it's more expensive in the short term. It's going to be more expensive in the long term, and civil society needs to really promote the green economy, because the success will depend on people's willingness to adopt the technology, to have more convenience, speed, and security in the long term.
Look, I think the way that you even framed that question is an excellent sort of entry point. Unfortunately, because technology moved so fast, well, actually, fortunately, but in the context of this answer, it's unfortunate. It's moved so fast and driven the cost down so quickly, there's a hell of a lot of myth and misunderstanding around what it really is, what is doable in my country, is it really that low? If you take, and there are several good examples of emerging countries. Morocco, excellent example. South Africa, I mean, South Africa went through a hell of a messy political mess, state capture and all that nonsense over a period of 10 years. But during that same period of 10 years, they were able to protect the launch of a renewable energy program that rapidly deployed significant volumes of, the state capture sort of stopped it, otherwise they wouldn't be in the mess that they are in. But in between, they were able to put 20,000 megawatts, 10,000 in the system and another 10,000 in construction of new renewable energy capacity at very competitive prices. So that's a developing country that is, so it is not expensive up front. It is in heavy investment up front, but there is a huge amount of capital that is available. Capital is not the problem. Technology is not the problem. The problem is inertia, horrific lack of understanding of what is possible, and incumbents trying to keep their share of the market without recognizing that in fact their share of the market is even not going to get damaged for quite some time, because the new capacity is going to serve the growth and expansion. Renewables allows us to reduce the average cost of energy in any country Given the fact that energy is used for just about anything and everything we do, for life itself, can you imagine the multiplier impact? I keep trying to point out, I mean, this is very obvious, but you need to think. Just one second. 12 cents as an average number. When you get energy at 12 cents, you're not going to poor community. Tough for this audience to imagine, for me to imagine, but 12 cents. I would try to use the energy as minimum as possible because it's expensive. When I can supply energy at 4 cents, I am going to take the energy and use it to creatively produce other things and create more value for myself. So that is the real impact. It's not about the 12 and the 4. It's about how much of multiplier that it will have into the economy. And that is all renewable energy. And the third thing, that 12 cents is a price that oscillates every day, depending on the fuel market of the world. God doesn't charge us. So the 4 cents is fixed. So I know with certainty, I don't need to worry about my price for the next 35 years. Huge, compelling value proposition. It's just not understood.
I want to echo that point because...
And pick up on this. I mean, how do we ensure, though, that the transition itself doesn't turn out to be the path of like insurmountable difficulty?
But I want to understand when you say difficulty, because what I wanted to echo was that, you know, in Mexico we can produce at 2.5 cents a kilowatt hour.
Yeah.
The government produces at 80%, 100%, sorry, no, it's the other way around. We produce at 80% less than the government.
Yeah.
So it's not more expensive, it's a hell of a lot cheaper. So not only do you have renewable energy, it's cheaper. It's a higher upfront investment, but you've got capital that wants to do that. Because you know your operating costs are lower later, but you've got other sources that again are dirtier and more expensive. So to me, it's just again, it's a question of making sure, as was just mentioned, that everyone understands what the value proposition is and what the impact is going to be. The impact actually could be something lower. Like I said, you will have some possible disruption at a local community level, but we just need to educate. And to me, the government should be serving that function of making sure that they help in that transition. But from an energy production perspective, and from a global perspective, it's there. The elements to doing it are there.
Yeah, and sorry.
Yeah, go ahead.
Yes, and I totally agree with that. And just to share our experience of the development in the hydrogen, it's a similar story because it's also part of the renewable energy. We have seen like all the stakeholders in the society need to work on that goal, and especially the policymakers, the end users, as well as like investors. I mean, that's all can put all the puzzles together. That's what makes it happen. For example, I think at the policymaker level, we see internationally there's zero emission or carbon neutrality goal. I think that's definitely will help with overcoming some of the difficulties people might foresee. And also at the government level, like in Europe, Middle East, and I believe also in India and Mexico, and in China, I just saw the news in Saudi as well. They also have their carbon emission goal, 2050.
Yeah.
Country have a different timeline, so I think that helps a lot as well. And at the end user level, I think the gentleman greatly demonstrate the benefits of using renewable energy, because what they more care about is whether the cost will come down.
Yeah.
So as long as we can demonstrate that will help a lot. And other stakeholders, for example, investors, we were talking about this yesterday with a group of investors. So ESG is a huge topic at the moment. And all the investors, they're looking into opportunity in renewable energy or like ESG sector. So from their perspective, as long as they can see, they can get return from the investment, or they can list on stock exchanges, I think that ticks the box as well.
Okay, Sharif, so the IAEA says that electricity demand is set to grow by 40 to 60% in some regions in the next 10 years. And researchers predict the mounting prosperity in the developed and developing world will continue to drive this demand for key resources. But at the same time, you have these constraints in energy, water, and other natural resources, bringing about kind of difficult to manage instabilities. So as we've been talking, traditional modes of power is still going to be needed if we are short of the green electricity, there's a stopgap measure, as Patty was saying.
Yeah, I mean, it's obvious. I mean, again, this is not a competing between renewable, traditional, and everything. I think there is a bit of an overestimating of the speed that you can transition.
Yep.
I think, with all due respect, the green hydrogen and all this is going to take much, much longer time than what people estimated. I think the molecule price is still extremely expensive. There is a lot of finance that needs to happen in a lot of countries that we don't look at it. If you look at Africa as an example, if you look at the water problem, I think people totally underestimate the water. And that's what we keep saying, how even taking the slogan of the conference here, our humanity, and how can you provide sustainable energy and provide water. And one of the examples, for example, we said before, even look at the oil industry. The oil industry produces 5 times water than oil. A lot of people don't know that, but we produce 500 million barrels of water per day, and we produce 100 million barrels. Most of this water is actually wasted. If you want to look at the humanity and what we can do, we can actually take that water and give it to humanity for other projects. So it's not only electricity. They need electricity. We need to clean the water. We need to give it back to the community. We need renewable to be able to make the green hydrogen, which is, again, you need source, you need land. So there is a lot of that cost, for example, that you talk about in the Middle East and Morocco. All this is because the land is for free, right? If you look at that cost in the US, it doesn't cost you, by the way, 2-3 cents. It costs you much more than that. If you want to change your house in Texas or whatever, it was going to cost you $90,000 in investment first, or the solar company is going to subsidize you for 20 years. So it is not really one solution for all the countries. You have to look at every solution and every country and where are the means of that financing for it. But again, I just want to reiterate, we are not competing. All the technology are needed and all the sources are needed for the next 30 years at least.
So I want to ask you about climate change, but Patty, how far away are we from a time where the old technologies don't make sense anymore? I think of mobile, for instance. There are countries that didn't have landline, kind of telecommunications, and just completely bypassed and went straight to mobile. So cost has declined so much that the biggest obstacle to expansion is not there. So what about countries? If you have a tenth of humanity that still doesn't have electricity, how far are we from countries being like, forget about it, I'm just going straight to renewables?
Look, I think, countries are starting to go down that road. So the good news about renewable energy, again, much used terminology, energy has been democratized. That energy is everywhere. It's not just in a few pockets. And and the technology is very modular. We capture it at the place where the energy is being provided. So we are able to put a rooftop panel and a battery and provide a very good life for the occupant of that house. So that is starting to be deployed at scale. You are seeing microgrids, mini grids, so localized solutions. You're absolutely right. I think there is a substantial part of the underserved world today who will completely bypass wires and poles, and they will go straight into localized solutions. And even with hydrogen in due course, because hydrogen is also the same story, by the way. Electrolyzers don't come in monstrous modules. They are smaller modules. So it'll all get localized over time. So over the next 30 years, and
it'll create a lot more equity.
Absolutely. Just let's think about the fact. Let's look at history. Let's look at every transition. There have been many other transitions. Every transition took 20 to 30 years. Very tumultuous time. There were a bunch of naysayers who said it's never going to happen. There were losers, and that lot lost. And the winners, even the incumbents who embraced it and jumped into it, and like many people are starting to do, many of the oil and gas companies are starting to do, who participated in the transition, are the subsequent winners. So the transition, we are on that trajectory. it's not a discussion around, is it going to happen, is it not going to happen? It's going to happen, it's finished, end of story, bus left the station. Only question now, how quick? Okay, we are in the early stage. We are in the first 3 to 4 years. So from my timing, even in this sort of accelerated world where everything happens fast, probably we got another 16 to 18
So as
years.
Sharif says, I mean, we're still we're not going back.
No.
But we can't, we're not forward yet. We're not all where we want to be yet.
No, I mean, you have two issues. One is that you've got an infrastructure that's been put in place for, 100 years?
Right.
So to replace that infrastructure, you can't do that overnight, right? That's one thing. Second is that global growth means electricity consumption. You can see that curve.
Right.
So as the world continues to, improve or grow economically, you're going to increase consumption.
Right.
So, and at the same time, you're retiring existing, assets that are, past their operating life. So, there's so much growth in energy consumption because people like their 60-inch TVs, they like their cell phones, they like their electric cars, they like their air conditioning at 70, 68 degrees. With all that, there's huge energy growth, right? So
it's just going to take time. It's just going to take time.
Exactly.
I think
It takes time.
Nasser put it very nicely when he said in Germany today, use coal at $60 to $80, so actually switching to coal as energy transition, not switching to renewable, right? So it is time. It is absolutely, fully agree, it's just time.
I want to ask you about climate change. How much should states be proactively worried about climate change impact? So, Sharif brought up water, but drought conditions, particularly in a lot of areas, if you want to rely on water, hydro power, how can that be a feature in terms of achieving clean energy goals if we get this permanent loss of a significant source of carbon-free electricity that's not replaced by others? Climate does kind of limit a little bit, if we're using the planet to help provide energy, isn't it a kind of cyclical problem?
By the way, I'm very sorry to tell you that I'm very happy that we're going to have a hell of a lot more climate catastrophe and calamity because that will focus our mind. Think of all the unintended consequences that we are waking up to.
I'm not saying that that's not an impediment, that's not an imperative, but isn't it also an impediment?
But let me tell you immediately, even with the existing energy infrastructure that we have, the fossil fuel infrastructure, what is the consequence of climate change? The river water levels go down. All of a sudden, the water intake and discharge that is required for the cooling of the fossil fuel for power plants are all in the wrong place. Well, they're not in the wrong place, they were in the right place, but climate change has dropped the water level down. It's going to take you 18 months to 2 years of big investment in order to reposition those. Nuclear power plants are going to run into trouble. Hydroelectric plants are already in trouble. They get flooded in the wrong time, they dry up in the wrong time. So even the existing energy infrastructure architecture is going to get hammered, quite apart from the fact that so we are going to have to, and when we do that, we're going to become much more alert and acute to the fact that we shouldn't be relying on those things. We should be relying on technology, on the new technologies that are coming available, whether it is and even this battery, what about when it's not sun is shining? There is solutions already. In Dubai, we are deploying 1,000 megawatt, 900 megawatt plant to supply 24 hours a day at a cheaper price, 7.2 cents per kilowatt hour, than that country can do with fossil fuel based for 24 hours. So the solutions are there. It's all about the rate at which we can do it. How quickly can we bring the capacity online?
Do you want to weigh in on
But what I wanted to say is that you can't rely on one sort of alternative energy or renewable energy source as your solution. It's got to be a mix, and it's got to be a mix not only of renewable, but also fossil fuels. It's simply because of the demand is so high. Now you bring up a great point, which is climate change is upon us. We have been slow in acting to reduce the impact of humans on the global climate, but it's happened, right? So,
and now we're asking even more of the planet because we're looking for the planet to provide our energy.
wherever we can, right? So I mean, like I said, you can't just rely on
Right.
water for hydro,
Right.
because even he's got a great point on nuclear or coal or any other sort of thermal requires water as well. So
Right.
if your water level in that region is either drying up or lower, then you've got a problem, no matter what the
Well,
source is.
it's obviously hot, so you'll have solar. Sharif,
Exactly.
if corporations are making the switch to carbon neutral energy, they're putting, you kind of reflected on this, they're putting indirect pressure on land already scarce from competing uses, urbanization, industrial development, because more renewable plants are going to be needed to satisfy demand. So this in turn is going to put added stress on the planet.
Yeah, absolutely. I mean, there is a lot of stress on the system already, as mentioned by all the panelists, right? So that's why you have to see the most economical, best way to do it in a proper manner. Not one solution fits every country, fits everywhere. In places like here, we have no problem with land. Okay. So we can put anything we want on any land, and it's free of charge. So.
Yeah, I totally agree with that point, and I think every country is different. Even within country, every province, every region is different. I think the beauty of having renewable energy and the traditional energy sources is that we can pick and choose to see which one is more suitable based on the local, the local conditions. Yeah. And secondly, back to the climate change, I think also another beauty of a renewable energy and of course the traditional energy source is that yes, so we can use what's available in the climate, right? If it's solar, then we use solar.
Right, right. Okay, unfortunately we're out of time, but as we close, I want to just very quickly, which of these, we're talking a lot about all different types of renewables, which is the one that shows the most promise to you?
I would go for renewable hydrogen.
Right, Hadi.
Look, renewable energy renewable energy is going to be the solution. All the different technologies will apply, but green hydrogen will be a significant component of that final energy solution.
Jaime.
For my country, solar.
Solar.
Solar. Okay, well, we could talk another hour about this, but I'd like to thank everybody for coming, and thank you to my panel.
Thank you
Thank you very much.
Thank you.
Thank you.
Good afternoon. How is everybody? Well fed? Well rested? Good? All right. I see I have some friends here. That's good. My name is Tom Hale. I'm the CEO of Aura Ring. If you've never heard of Aura, it's not surprising. Only celebrities, heads of state, superheroes, and people like me have an Aura Ring. It tracks and measures your sleep, your heart rate variability, your temperature. It gives you the superpower of knowing your own health. I'm here to talk to you about something today. What if I told you that there was a miracle drug that you could take and it would improve your mood, it would improve your energy, it would make you smarter, you would remember more things, you would be healthier. Over the long term, you would live longer. You'd have a lower chance of getting Alzheimer's or Parkinson's or type 2 diabetes or a heart attack. Would you be interested in that drug? Yes, you would. The good news is that drug exists today, and it is free. And it's the only drug that you do every night. Sleep. But let me tell you something. We are living in an epidemic of shortage of sleep. You thought the pandemic was bad. Sleep is a big problem. Almost a third of adults report they have a sleep disorder like insomnia, restless leg syndrome. 3 to 4 adults worldwide do not get the sleep for optimal performance mentally or physically. That's 8 hours a day. 4% of the population has been diagnosed with obstructive sleep apnea. Have you ever seen the machine you put on your face, the CPAP? Actually, it's more like 1 in 5 have sleep apnea because many people are not diagnosed with it. Let me ask a question here. How many of you got 8 hours of sleep last night? Raise your hands. Oh, good, good. How many got 7 hours of sleep or less? Yes, that's right. On average, 3 out of 4 are not getting 8 hours of sleep. That is what is optimal. But it's not just about the quantity, it's about the quality. Are you getting good sleep? And what's the cost of bad sleep? Well, a renowned sleep doctor, Dr. Matthew Walker, he says sleep is the foundation of health. Most everybody's used to exercising, eating right, dieting, all that good stuff. But if you don't sleep, all of that effort will be less effective. So make sure you get your sleep. What are the risks? Well, you're 3 times more likely to get a cold. You're 20% more likely to have a heart attack. You might sustain a workplace injury or an injury on the playing field. And it's not just measured in injuries, it's measured in lives. This is data from 7,000 accidents studied by the AAA, the American Automobile Association, over 2 years. What they found? Truckers, drivers, anyone who had less than 4 hours of sleep was 12 times more likely to get in an accident. And 3 times more likely for that accident to be fatal. Why? Because when you fall asleep on the road, it's not like, oh, you're out. You become a missile. The cost is measured in human lives. So, it's not just those kinds of things, it's health conditions. Sleep is implicated in obesity, type 2 diabetes, high blood pressure, stroke, the epidemic of depression and anxiety. And the cost is not just measured in individuals, it's measured in society in hundreds of billions of dollars of lost productivity. Hundreds of billions of dollars of wasted human effort that could be used to make our planet a better place. Sounds pretty grim, but there's good news. All of these outcomes are solvable and reversible. And I'm going to give you some tips, especially those of you who didn't get enough sleep last night. What can you do? Go to bed at a consistent time within an hour. Wake up at a consistent time within an hour. Sleep in a cool room. Get a product like an 8 Sleep mattress that cools you down. Avoid caffeine. Don't check your email before going to bed. And measure and manage your sleep, which is where wearables like the Aura Ring come in. They help you measure and manage and track your sleep, because what you measure gets managed. But it's not just about sleep, everybody. It's about health. Sleep is the foundation of health, but sleep is just the beginning. You want to track all of the voices that your body is giving off, all of the signals that your body is sending. What's your normal heart rate? What's your respiration? What's your heart rate variability? Is your body temperature elevated? Maybe you've been working out. Maybe you had a late dinner. Maybe you're about to be sick with influenza or COVID. These devices, worn 24/7, are a revolution in connecting you to the data inside your body. Your body has a voice. All you need to do is listen to it and learn what it means, which is where we come in. This is my sleep history. These are 2 nights. You look at the right, almost 9 hours of sleep. Yay, me. On the left-hand side, 5.5 hours of sleep. Not so good. But wait, the difference is the quality of my sleep on the left is better. Look at the dark blue bar along the bottom. That's my deep sleep. Deep sleep is critical for the recovery of your body, your muscles. Look at the light blue bar at the top. That's your REM sleep. That's critical for cognitive function, for memory, for learning. It turns out I had better sleep with less sleep. It is quality over quantity. And how do you measure that in performance? Is anybody interested here in performance? Okay, the National Basketball Association did a study of basketball players, some who slept more than 8 hours, some who slept less than 8 hours. Of the cohort that slept more minutes played, more three-pointers, more points per minute, better free throws. And those who were underslept, they weren't just not as good, they were actively bad. 37% increase in turnovers, 45% increase in fouls committed. If you don't sleep, you are letting your team down. Who's in finance here? Show of hands. Anybody in finance? There's a very interesting study, hedge fund. 2 groups of portfolio managers, one with the Oura Ring, the other group without. The one with the Oura Ring slept better. Who do you think had the best IRR after 12 months? The ones who slept. So if you're interested in performance in this market, it's easy. Buy a ring. But it's not just about sleep, it's about health and about science. We're a science-led company. We have the evidence that suggests that health outcomes can be improved. The University of California, San Francisco ran a COVID survey with 63,000 people wearing the ring. On average, we could detect that they had COVID 3 days before they showed symptoms. What's value about that 3 days? If you have 3 days, you can avoid getting your children sick, your colleagues sick, your wife sick. You can avoid getting your boss sick. Believe me, it's a career-limiting move, so try and avoid it. What you can do with science is you can see that the metrics that are captured from your body, added to the technology of machine learning and computers in the cloud, can improve long-term health outcomes. All right. So, if you've heard anything I've said today, get your sleep. If you know anything about parenting, get your kids sleep. If you want to perform and be optimal and be healthy, get an Oura Ring. But we're here to invest in the future, aren't we? We're here to solve problems that are facing us. The problems of climate change, economic inequity, political strife, conflict. Believe me, the people who are better slept are going to be the people with the innovation, the energy, and the creativity to solve the problems that are facing our world today. And you had better wish that they are wearing an Oura Ring, because then the outcome for the globe, for humanity, for us as individuals, will be better. Because we know that a healthier future is possible. So join us. What will you do? Can you start to model for your employees that sleep is important and that they'll perform better with sleep? Can you tell your organizations to prioritize their health in the name of performance? Can you make your societies and your governments have policies that will educate people about sleep? You're all leaders. You wouldn't be here if you weren't. So I invite you to join us to improve the world, make a healthier future by improving our sleep and our health through technology. Thank you.
Yeah, good afternoon. Let's start speech. My name is Masahiko Kato, President of and the CEO of Mizuho Bank. This is Japanese bank. So I'm delighted to have been given an opportunity to deliver a speech at the 6th Future Investment Initiative. The global trend in sustainability is bringing about material changes in the value and aesthetic of humankind. Today, I'd like to discuss the upcoming new energy industry in each region, as well as the role that we should play as Japanese financial institution and as a close friend of Middle Eastern countries. The global economic and the social environment is changing, following the global pandemic, as well as the situation in the Russia and the Ukraine. In Japan, hydrogen is being considered an essential alternative energy resource for achieving carbon neutrality. However, Japan has a limited amount of hydrogen resources and need to procure them from overseas. In this context, we are aiming to establish a hydrogen supply chain in cooperation with countries having abundant energy resources like the Middle East, which is an important partner of ours. Japanese companies are actively participating in overseas large-scale hydrogen and ammonia production projects. They are advanced technology in hydrogen transportation and storage, such as those involving liquefied hydrogen and organic hydrolytes. And they are global leaders in hydrogen utilization technologies, such as XCVs, as well as turbines for hydrogen and ammonia power generation. In Europe, hydrogen is expected to replace natural gas as an energy source, and ammonia will take an important role as a hydrogen carrier. Europe is likely to become the first region in the world for the new market to emerge. Within this framework, the Middle East is anticipated to become an important source of green and blue hydrogen, not only for Japan, but also for Europe. There are already several projects in which Japanese companies are taking part. Japan has been leading the world in the establishing the global supply chain for hydrogen. That's why Japanese companies have a strong presence in this field of technologies for production, transportation, and utilization of the element. In addition, the Middle East has a large number of depleted oil wells. That's why it has strategic advantages with regard to projects using the carbon capture storage, so-called CCS technology. And there seems to be a significant room for Japanese companies with similar technologies to participate in them. Using the same approach as with floating offshore wind power, the technology could be expanded to Asia, including Japan, based on the experience in the Middle East. Saudi Arabia has set out its Saudi Vision 2030, and it also promoting initiatives aimed at achieving net zero emission by 2060. In particular, expectations are increasing for us, financial institutions, to be partners in this journey. Mizuho has a proven track record in providing support for divestment to such clients to accomplish their sustainability strategies. Decarbonization and finance for renewable energy, as well as advisory service to realize sustainability transformation. The technology developed in the Middle East could be deployed in Asia in the future, and Mizuho, as a Japanese financial institution, hope to act as a bridge between the two regions. We believe that Mizuho has an important role to play in co-creation a sustainability future through sustainability transportation. And I would love to provide advanced harvest for our customers and the society. Mizuho provides initiatives for small and medium-sized suppliers to address environmental issues from a financing perspective. Especially, we are the first bank in Japan to launch sustainability supply chain finance with the goal of reducing CO2 emission. In addition to its own initiatives, Mizuho is also focusing on public-private partnerships. Mizuho and the Tokyo Metropolitan Government signed agreement to accelerate sustainable finance together. We will continue to have constructive dialogue with clients to gain a deep understanding of their potential changes and needs in order to develop and provide optimal solutions. What do we want the future to be like when our children born this year reach the age of 30? What can we do now to achieve this? And moreover, what can we do together with you? As Saudi Arabia's best partner, we promise to make great steps for a wonderful future together. Thank you very much for your attention.
Good afternoon, distinguished guests, ladies, yes, and gentlemen. Well, another Japanese banker on the stage, so please bear with me. It's a pleasure to be part of the 6th edition of a prestigious future financial investment, which continues to act as a curator of a global human collaboration in society's most pressing environmental, social, governance, and economic issues to strengthen actions to shape a better world. And right now, it is my belief that our most pressing global conversation needs to be about credible, coherent, coordinated action towards climate solutions. As a fundamental part of a modern economy, the finance sector plays a vital role in taking action towards a transformational change with a clear and achievable net zero goals. I'm proud to say, as a leading global financial institution, MUFG continues to make a significant contribution towards a sustainable environment and a society in enabling a new global energy order. We are doubling down on the climate change measures and environmental protection. This anchors how we assess and manage risk associated with our business activities, as well as setting a sustainable finance targets. And this is why we formulated our carbon neutral declaration in May 2021. It guides our implementation of a group-wide global environmental measures aimed at net zero emissions from our finance portfolio by 2050 and from our own operations by 2030. Our sustainability commitments made us the first Japanese bank to join the Net Zero Banking Alliance in June 2021, and we resolutely take our commitments seriously in supporting an orderly transition to a decarbonized economy through our financial services and solutions. We are also committed to proactively contribute to creating a sustainable society by fostering the virtuous cycle between the environment and the economy. Since joining the Net Zero Banking Alliance, MUFG has been proactively facilitating harmonious conversation with the membership banks. We have since led a working group tasked to develop a comprehensive framework for transition finance. Indeed, we believe that the transition finance is a key enabler for achieving a carbon neutrality by 2050. Earlier this month, MUFG, as the worker chair of the Financing and Engagement Working Group of the Net Zero Banking Alliance, published a transition finance guide. It contains a principle that financial institutions can use as a reference for their approach to transition finance of each sector, and proposes the policy measures to make a transition finance more mainstream. A central message of this transition finance guide is that banks should clearly articulate support for their clients' net zero transition, including those clients in the high emitting sectors. This requires clients to commit to net zero targets of their own and develop credible transition target strategies. As a next step, the Net Zero Banking Alliance member banks encouraged to develop and disclose their own transition finance framework based on the guide. Over time, we will learn from our own transition finance experience, and combined with the lessons from our clients' experience, we will use that knowledge to recalibrate frameworks and guidelines as appropriate. It is very significant that sustainability has been at the center of a conversation here in the Kingdom and at the heart of Saudi Vision 2030 since its inception. The fact that leadership is ushering in on an era geared to reach net zero by 2060 by accelerating energy transition, achieving sustainability goals, and driving a new wave of investment has been adequately communicated to global markets, and the roadmap continued to gain traction. Indeed, the Kingdom's commitments was lately demonstrated by issuing a 100-year green bond, by a very strong and clear commitment by the Kingdom's Sovereign Wealth Fund towards its sustainability targets. We are confident that through mutually beneficial partnerships, the Kingdom's initiative towards a cleaner, greener, and a more inclusive future can succeed. Indeed, the Vision 2030 puts sustainability at the heart of everything Kingdom does, from policy development and investment to planning and infrastructure. By addressing today's energy and climate challenge creatively and responsibly, Vision 2030 is an inspiration to others around the world to share in building a sustainable future. The renewable potential here in the Kingdom and the broader region can lead the world, especially in the hydrogen. With a sufficient supply of land, existing industrial capacity, excellent solar and wind resources, and geographical proximity to growth markets, Saudi Arabia is clearly in an excellent position to become a dominant hydrogen exporter. The versatile and the flexible nature of hydrogen make it the swift army knife of energy, with multiple uses as a fuel and a feedstock. It is expected to grow exponentially with the power to drive widespread decarbonization and secure the Kingdom and the region continued energy sector leadership. Not limited to hydrogen, Saudi Arabia has a target of generating 50% of its power from renewables by 2030, predominantly driven by solar and wind, which underscores how serious the Saudi leadership is about carving the contours of a new energy world with its next generation of exports. Record growth in renewables, representing over 80% of all new power generating capacity last year, is a clear sign that the energy transition is gathering the pace. Having said that, recent events have shown that unplugging the current energy system before we have built a sufficiently robust alternative, but both economic and climate progress at risk, and calls into question whether we can ensure just transition that is equitable to all. A successful energy transition must be built on the progress for the economy and the climate in unison. It must be based on the engineering and economic evidence, acknowledge the multiple complexities and challenging trade-offs, as well as accelerate the deployment of practical solutions. And for that, we need an inclusive approach addressing energy transition and safeguarding energy security needs by leveraging the experiences of all sectors of society. Ultimately, what's needed is a comprehensible and a harmonized strategy that is practical, pro-growth, and pro-climate. The strategy needs to value the complexity of energy and industrial systems and recognize the sheer velocity of transition required, demanding a greater alignment and collaboration and everything from capital allocation to product design, public policy, as well as a behavioral change on the demand side. With this, we look forward to COP27, just 2 weeks away, as a crucial platform of the key areas of finance, adaptation, and mitigation. Finance, of course, has a function in a multitude of climate issues, given its crucial role in the support and implementation. Accordingly, we must continue the important dialogue on concessional and grant-based public financing to complement transition finance driven by financial institutions. With this determined set of values, we support Saudi Arabia's vision with passion and vigor as it pursues sustainable growth. We look forward to being part of its long-term success in reconciling the sustainability needs of both energy and climate. We owe it our own children and the generation to come to deliver a more inclusive new world order. Thank you for listening and wishing you all for a productive conference. Thank you.
Okay, good afternoon, everyone. I hope you had a good day throughout the events, and I hope we will have your attention for an excellent interaction today, trying to understand and explore the role of corporations in building, supplementing, and augmenting the local economy by creating jobs and generating new revenues. I am joined by this esteemed panel, starting from the left here. I have Mr. Sang-An Choi, President and CEO of Samsung Engineering, followed by Oyvind Eriksen, President and CEO of Aker ASA, followed by Catherine Zhu, Global Head, Venture Digital Innovation and Partnerships of HSBC, and with my colleague here, Hitoshi Nara, President and CEO of Yugawa Corporation. Okay, so let's start with maybe a warm-up question with regard to you've been in the business for many years, and I would like to maybe hear from you what is really the biggest impact that your organizations had on the local economy that you are operating at. So we start with you, Mr. Sang-An.
Yes, we Samsung Engineering was founded in the 1970s, almost 50 years ago, established by the Korean government as Korea's first engineering company. At the beginning, we were supported by foreign entities to grow our capability. Before year 2000, we built our capability and capacity in Southeast Asia. Then, starting from 2001, we entered into the Saudi Arabia. At the same time, we started business in the Middle East too. We worked as a major contractor, and we worked as growth partner to Saudi Arabia, issuing in-kingdom orders, increasing jobs in Saudi Arabia, and fostering younger talents, growing many new engineers, something like that. We worked in Saudi Arabia. Thank you.
Thank you. Actually, I've seen Samsung Engineering throughout my career, and they have been really developing and taking care of the ecosystem around them and building a very strong talent to support their, their operation. Thank you. Oyvind?
So I'm not making this a competition about age, but it's a fact that Aker was established as a mechanical workshop in Oslo, Norway, 180 years ago. Today, Aker is the largest group of industrial activities in Norway, and it's also the largest private employer in my home country. But Aker is also a global business with 50% of revenue domestically, and the remaining 50% generated outside Norway. The short version of the Aker history is that we have been a front runner in more or less all the core industries of Norway. So today, energy in general and oil and gas in particular are the main activities in our group, accounting for roughly 2/3 of the business. But we are also in renewable technologies like offshore wind. We're in clean technologies like CCS. And in recent years, we have also entered into new industry segments, including enterprise software. And the consistent method of work since we established Aker 180 years ago is to build new industrial activities and new technologies at the shoulder of existing industrial activities. So when we entered the software space less than 10 years ago, it was the domain expertise in our established industries, oil and gas in particular, which was the entry point and which helped us to define more precisely what problem to resolve. So what Aker brings to the Norwegian economy is partly innovation, partly technology, partly how we have transitioned ourselves in parallel with how Norway has changed, and partly a significant workforce domestically, and last but not least, a mindset of partnership approach. Because Norway is a small country, only 5 million people, but it's a relatively significant producer of oil and gas offshore, and it would have been impossible for us to produce the natural resources successfully without strong partners, both as operators, but also as suppliers. And that's what we would like to bring also to this kingdom. A strong partnership approach and a commitment not only to build a significant presence and business, but also to be a part of the impressive transformation of the economy and the industry in Saudi Arabia.
Okay, thank you. Catherine?
So HSBC, it's hard not to know HSBC as a brand name. We operate in 56 countries globally. We're the second or first largest trade banks in the world. Every one of the 3 ocean liners right now flying in the Pacific and the Atlantic Ocean is trade financed by HSBC. So it's a really big household name. We employ 250,000 people worldwide. In Saudi, we actually employ over 5,000 people, and we serve more than 1.5 million customers. So our brand value proposition is we create a world of opportunities. We do that by bringing together people, our customers, our suppliers, our technology providers, communities, and the markets together and drive progress and growth. And we look forward to partner with Saudi and really like my colleagues' comment about open up the world of opportunity, collaborating, and make things come together.
Okay, great. I have to say that maybe I'm one of the ignorants here that I thought HSBC is only about banks. So I'm glad that you are doing much more than that. And
we do much more than financing, right? So we're in EV, we're in solar, we're in biotech, we're in many, many sectors. So happy to elaborate further.
Okay, very good. Okay, Yatoshi-san?
Yes. Yokogawa is automation vendor and solution vendor. Actually, our company core competency is measurement, control, and integration information. So that means we contribute mainly process industry. So this is our business. And we are very proud to contribute local and regional knowledge-based economies by investing and developing local talent and creating jobs, developing and stimulating the SME value chain through our business, and collaborating locally for the development global applications. So that means I trust this will have a sustained impact in regions where we operate. Thank you.
Okay, thank you. I think Yokogawa really have a very impressive growth story in Saudi Arabia. I remember in the 90s when you first started with very small projects. And today, Yokogawa is one of the, big Mac suppliers competing with the biggest in the world. So I think that's really very impressive. Okay, very good. So maybe let's take another round of questions. Now, what you have really done in the areas you operate at is very impressive. But as you know, there is nothing stays where it is. Always we need to push further and do more with what we have to support the economy that we work in and develop the ecosystem around us. So starting with you, Mr. Sengan, what would be the next maybe opportunity that Samsung would be exploring and finding and supporting the economy?
Yeah.
It will be better to introduce what we are working for increasing investment at the moment. It is our honor to be part of a great ecosystem as you build. And I appreciate that we have been building this ecosystem along with all of you here today. According to the statistics of the IMF, Saudi Arabia is one of the world's fastest growing economy, with the GDP growth reaching 7% range in this year. In this country of a promising economy, we aim to foster and hire local promising engineers who will lead economic growth of Saudi Arabia. Indeed, we are working to establish new EPC company in Saudi Arabia based on the NEC, National EPC Championship Program. Already we hired recently 20 Saudi young engineers, and they got the training at our headquarters. And they joined the on-the-job training program as well. And we will continue to recruit young talent, aiming to have 50% manpower filled by local hires in our new NEC joint venture. Because young guys are very easy and good at handling new technologies. We will encourage them to participate in our effort to advance digitalization and utilize our innovative solutions. And we will support them to grow into new leader in our NEC joint venture. In addition, we are preparing some paradigm shift in the existing EPC industry throughout our innovative change of a project execution structure. Developing and applying our new innovations, I suppose new jobs will be created in this Saudi Arabia. And we plan to strengthen the partnership with the local vendors and the subcontractors, providing our smarter shops and the module fabrication technologies and the digital transfer, digital technology solutions. Something like that, we expect new jobs will be created very much. And we are very actively supporting OK vendors to enter into the kingdom to foster market in raw material and equipment fabrication related to this EPC industry. Something like that, we are working very hard behind Aramco's notice. Thank you very much.
Okay, great. Now, these are really excellent and very, very ambitious plans, and definitely Aramco would be more than a supporter. We would be more than willing to join hands with you and push the EPC industry forward, given the opportunity that we have here in the kingdom. Thank you.
Thank you so much.
Oyvind?
Well, we are all in the midst of an energy crisis, and Aker will try to play our role in order to provide both energy security energy efficiency, and energy transition. As far as energy security is concerned, we are already today the second largest producer of oil and gas on the Norwegian continental shelf, and we have the most ambitious investment program among any operator in our home country. 18 greenfield projects, and we're investing $30 billion during the next 4 to 5 years in new capacity. So that's a main contribution from us to energy security, and oil and gas is a part of a longer-term strategy and foundation in Aker, both as a matter of technology, employment, competency, and cash flow. But we are deploying the said resources also to transition ourselves once again into new industry segments. And I mentioned previously, briefly, renewable, mainly offshore wind, which is a very important part of a longer-term development. The Aker Group has designed more than 60% of all floating oil and gas installations in the world. And that competency and that experience is our unfair advantage to help offshore wind to also to develop floating foundations. So we were both in the bottom fixed and in going forward in the floating offshore wind industry segment. What I've talked about so far is the more established part of the Aker Group. But I've also mentioned previously the fact that we, during the last decade, entered into industrial software. And that's for us a very important part also of the said energy challenges. In order to provide energy security and add additional capacity, we need to develop a different method of work to execute large capital intensive projects. So as we speak, we have developed technology deployed exactly for that purpose, to reduce the number of engineering hours in a large capital intensive project, to enhance the efficiency between the operator and a wide range of suppliers, to reduce the time it takes to develop a large project, and basically to reduce, also to identify and mitigate the risks involved. So software is for us an enabler for both the transformation and for the improvement of our company, but it's also a very, very exciting new industry segment. Because Aker is not the only company in the world with a desperate need to change helped by new technology. So we took a different approach and established software as a separate business in the Aker Group. And we have established a number of exciting partnerships in order to scale also in that part of the Aker Group. One of the most important partnerships is Context here in Saudi Arabia, a partnership with Aramco. And Context will both distribute our technology, Google Cloud services, and other software technologies in the kingdom. And I can hardly see any country in the world today with a higher level of ambition and a bigger amount of opportunities than Saudi Arabia. And I can neither see a country with a better alignment between the government and the private sector. So to be a part of it is obviously an exciting business opportunity in itself, but it's also a contribution to the transition of existing businesses, not only in Aker, not only in Aramco, but all around the world. And if you sum everything I've set up, it will be a lot of innovation, a lot of new technology, and a potential to create new and exciting jobs at scale.
Okay, Oyvind, I think you are really bringing a lot of good points. I think we can maybe spend another couple of hours, discussing some of them. But the energy transition and the carbon neutrality, with all the challenges that they are bringing, they're really bringing a lot of opportunities. And definitely that will open a lot of fronts for many of us to tackle and also to help the ecosystem around us. I have to take note of what Aker is doing with regard to the software. We are inspired with what you have done with Cognite and the JV we have through Context. And we are following your steps, and very soon we'll be announcing our digital arm. So we'll be glad to share this with the rest of the the people.
Sure.
Thank you. Okay, Narasan, you wanted to comment on this topic?
Okay. Thank you very much. I believe that winning companies actually create differentiation. So differentiation means a growth. So and the growth requires skilled personnel and technology. So human resource-wise, our growth strategy drive employment and bring up skills. This is our investment. Also, technology-wise, we would like to contribute digital transformation, sustainability transformation, and global transformation. This is our aim. Regarding to DX, we would like to contribute AI, machine learning, security, robotics, also plant optimization. So we would like to invest such kind of area and improve customer Aramco-san and also Saudi Arabia is a competitive advantage will be accelerated. This is our investment. Thank you.
Okay, very good. Maybe let's take another round on the same topic with regard to how we can really help the economy, but maybe this time with an R&D twist on it, and discuss how R&D can really enable the ecosystem and open opportunities. Catherine, you want to take a shot at this?
Yeah, so to build on the points made earlier, so R&D, we broadly categorize it as innovation. The definition of innovation at HSBC is actually not pure theoretical research. We have a very small group that does pure theoretical research, but the ballpark of what we do is we drive a commercial monetization of certain ideas and get to market, and then actually drive commercial outcomes, whether in the impacting customer experience or drive value chain shifts or cost or benefit realization. Those are the outcomes we achieve. So you can think of us as almost using R&D to deploy a lot of little speech boats alongside of the super tanker of HSBC. So these little speech boats can take on a bit more risk and can fall and fail fast, but learn something and get to market quicker. So that's how we think of R&D. And the other dimension we think of it is so today, tomorrow, and the day after tomorrow. So today is all incremental innovation. So bots, right? Chat bots, IVR, reduce call center call volumes, making the mobile banking apps perform better, reduce fraud. All those are incremental changes we got to make. Tomorrow is about let's make at least 40–60% of the work go away. Many of those processes do not exist. It's not for the rational reason that makes sense for our consumers or our supply chain partners. So, for example, payments. Payments is eating the world. So the fact that Stripe, TransferWise, right, and the Revolut exists is because we don't make it easy. So we actually want to significantly change our value chain, how we traditionally made money, to new ways of making money, making it easier for the customer to transfer money, to do foreign exchange. Therefore, we can earn the right to exist tomorrow. So that's a transformation. But super exciting is the day after tomorrow. I spend a big part of my time think about the day after tomorrow. When I wake up, we better still have a business. So what's scary that wake me up to think about the day after tomorrow are these deep hard tech innovations that's happening around the world, especially in MENAT. Things like digital assets, right? Digital asset is about giving every single person, engineers especially, the ability to code and create money. Tokens are of, right? Tokens are these form of unit that has a monetary value. I can create money, house money, custodize money, transfer money 24/7. Think about our global exchanges. Those are not 24/7. 24/7 with zero cost. That's the promise of digital currency. So what if that's widely adopted? How should we, HSBC, play a role in that future economy? The fact of, right, the foreign exchange and the cross-border, these frictions exist, does that mean they should exist the day after tomorrow? So we must really aggressively experiment in that new economy that's powered by these new technologies to play a role to create transparency, trust, and safety in the digital currency world. The other very exciting topic is quantum computing. Quantum computing is going to render most, right, maybe 90% of the cybersecurity practices exist across industries, beyond banking, super obsolete, literally the day you wake up the day after tomorrow. And quantum computing is not far away anymore. These things take 10 to 15 years to materialize. We think it's now 3 to 5, maybe 7 years. So we better wake up and upskill our engineers and think about, right? Quantum computing operates totally different than the 0 to 1, the binary world. You can have a cat that catch the mouse in the 10,000 rooms that the Queen has in the Buckingham Palace in fraction of seconds. That cat can exist in all those rooms at the same time versus going to one room, right? 0 to 1, 0 to 1. My cat can be existing in all rooms at once. That's what the quantum computing means in the layman's terms. So we are aggressively experimenting on those things. So that's how we portfoliorize our investments across all these three horizons and really make sure we have the right bets in all three.
Okay, well, that's great. So we should be watchful for the next disruptive technology that is financed by
We should be very aware of those, right? We can't say, hey, it's today, I'm just going to manufacture faster cars. You got to say, right, Tesla didn't manufacture a car. Tesla manufactured a flying iPad, right? That's where they're going. So don't make cars go faster and cheaper. Do a different car.
Excellent. Thank you. Let's maybe, I know Samsung is doing a lot of work. You mentioned something about uplifting the EBC industry to the next level. I know Samsung is really riding on a strong Samsung group with a lot of digital capabilities. Maybe you want to tell us a little bit on what Samsung is doing on the data platform that is really transforming the EBC execution and using VR, AR also for review of project documents.
Yeah. Sorry that is out of our scenario. You know, recently I'm saying we are no longer ordinary EPCs. I know another EPCs, we worked together as a joint venture. I could see even we were same before, just we worked as a conventional way. As we worked 10 years, 20 years, 30 years ago. Nothing changed in our execution detail. But recently, regretting all of this, we started to invest to develop new management technologies. Because this time is very good, because digital technology is very advanced. So most of all our engineering activities, nearly 50%, we made it automated. Without the engineers' involvement engineering will be made automatically, comparing to the past, almost 50%. Each discipline had their own automated engineering program. We put all of this onto the platform. And recently we succeeded to connect all this automated program we are calling engineering data platform. So comparing to 3 years ago, we could save engineering man-hour 50%. And then we can shorten engineering period 6 months than before. So very soon we would like to bring this new engineering way to our customer, to our Aramco. And also we would like to share with the Yokogawa together to make it more effective. Something like that, very unknown innovation we made. Very soon we would like to make it the propaganda on the magazines.
Very good.
We will share with it together. Thank you.
Thank you. Oyvind, so what's new on the software side?
So we have a wide range of opportunities. So you asked the question, Ahmed, about innovation and R&D, and I think for all of us that's a very vital part of our development and our transformation. Quite often we talk about R&D in financial numbers, but ultimately it's all about leadership and talent. And in our group, we always start with a practical problem to solve. And that method of work and that mindset also applies to what we have done recently on the software side. And software is a necessity to solve some of the larger challenges in the world today, including some of the environmental issues. So we are all committed to reduce emissions from our respective operations. But the question is how? And you can obviously achieve a lot by building new facilities, but you also have to improve existing facilities in operation. And one example in our portfolio today is that our oil company, Aker BP, they acknowledge the fact that we have too high CO2 emissions from our offshore operations, partly due to the fact that the facilities are still powered by electricity from gas turbines. Gas is more or less available offshore for free, so hence we are running the turbines more or less at full speed, regardless of the need for electricity. So by deploying our Cognite Data Fusion platform and by liberating data from all the relevant sources, we are today able to deploy artificial intelligence which predicts the need for electricity short and longer term, and to adjust the production of electricity accordingly. And this is work in progress, but the target is to reduce CO2 emissions from our offshore operations by up to 50%. So that's a significant improvement of existing industrial facilities, solely helped by new software solutions. Let me mention one other important area, which is carbon capture and storage. In my opinion, a prerequisite for solving the environmental issues in the world today. And I know that in the Kingdom of Saudi Arabia is committed to play a leading role also in that technology segment. Aker has been in carbon capture since the mid-90s. We have probably one of the few proven technologies available at scale in the world today. But the problem with CCS so far has been the cost. It's too costly. So in order to make the commercial decision more predictable for our customers, we have decided that going forward, carbon capture and storage will be offered as a service. The customer will pay a fixed amount per ton CO2 captured and stored. In order to develop and offer that product, you need a pretty accurate way to measure and monitor emissions. Once again, software tools is a necessity and a solution. So by combining new software solutions with available technology, you can actually also change business models, which will help us finally to scale a technology like CCS.
Great. I think, as we said, I think this is going to really open up a lot of opportunities for the local economy. I like the notion on the carbon capture, especially the mobile type, because that can be fabricated in a modular design where it can generate a lot of job opportunities for locals. So that's definitely something we'd like to explore with ACRE. Maybe let's shift gears here and start talking about SME. SME, as you all know, is really a key component of any economy. I know Yokogawa has been a pioneer in building their center in Spark, which is really a very strong signal of their commitment to the local economy. So Nara-san, can you maybe tell us how is that investment is going and what is the role of SME development as part of that center?
Thank you very much for your comment. So SMEs are the engine of economy. This is our recognition. And Yokogawa understands that working with SMEs is not only good corporate social policy, but also good for our business. We are working towards development SMEs in all regions where Yokogawa operates. So, and as a part of our business plan, we are considering setting internal KPIs or targets to maximize the development and empowerment of SMEs. So I'm very proud to say for Yokogawa, about 85% of local goods and service in our operation in Saudi Arabia are coming from SMEs. We want to accelerate more and more regarding to SMEs portion. Yeah, thank you.
All right, very good. Thank you. Okay, I think we're coming to the end of the session. So maybe I'll just give everyone a chance to maybe share with us any challenge that you are facing as part of your effort in localizing your businesses here, trying to support the local economy. Anything that we as Aramco we need to know of, or any of the ecosystem stakeholders around us here that also need to be aware of. Mr. Choi, and you.
I would like to talk a little more about the SMEs.
Okay.
And to increase job opportunities together. In our point of view, SME is our vendor and or subcontractors. Let's say we are a large firm. If we are calling large firm, all our vendor and the subcontractors, we can say they are SMEs. Rather than making relation only as the contract point of view, we are calling them as partner, local partners, in order to make their competition power increase. We are cooperating together. We are involving their part to review their activities, especially at the interfering part. Time to time, some vendors already started to make it automated without sending paper and waiting for approval. In order to make more efficient relations, we made it many part of interfering part as automated. That is how we could improve their competitiveness. And if some vendor, let's say it is SMEs, if they need some financing support, we are quite open to resolve, like some prior payment and some prior investment. We are calling it investment in order to solve their financing difficulties. But in the future, in next project, we may buy their goods at the discounting our prior payment. Something like that, we are cooperating very closely to make them more efficient to work and to make more competitive. We are very closely working together in this way, especially with Saudi local vendors together.
Excellent. I think I can really vote for Samsung commitment on finishing jobs and getting the subcontractors and the small businesses with them along these journeys. I think there is a track record that we have seen, and I really appreciate that approach. Thank you.
Thank you.
Mr. Eriksson.
Well, in the collaboration with Aramco, we are probably all SMEs. But it's a very inspiring opportunity. So thank you so much for opening the doors here in your kingdom and to share with us your ambitions and your strategies. And if you take the bigger picture, I think the Aramco strategy today is very much about the large global challenges and opportunities. And we have talked about it already. I'm not a second in doubt about the fact that in this kingdom you have what it takes not only to solve some of the large global challenges, but also domestically, but also do it at global scale. At the same time, time is of essence. We have seen net zero commitments, both from governments and from private business enterprises, in order to support the targets in the Paris Accord. We have immediate challenges with energy security, and we are all working on diversification of our respective economies. These are, it will take time, but still time is of essence. So I think the biggest challenge, not only for a country like Saudi Arabia, but also for largest business enterprises like those represented here, is to deploy the level of agility and speed which is needed in order to solve the said problems within the time we have available. So in order not only to develop a solution, but also to commercialize the opportunity, I think we should all inspire each other to not to spend more time on decision-making processes and discussions than what's actually needed in order to deliver practical, tangible, and financially attractive results.
Very good. I would support you on that. I think we need agility in decision making and getting to the results, as soon as possible. Thank you.
Could not have agreed more. So it's all about speed to market and urgency, right? The sense of urgency and agility. And don't do the reporting. The market should tell you where to focus versus generating these management reports. So we want to really just aggressively take advantage of the timing we're in. They said, don't ever waste a crisis. So I think no one can deny we live in some sort of crisis right now. And innovation is not a luxury, it's a necessity. So it's really a necessity for us to innovate, disruptive, and go forward.
All right, thank you.
Okay.
Mr. Nara?
So, I would like to add a little comment. So in addition to SME empowerment, so cross-border economic development is very important. So I hope it will be easy movement of labor and goods. And so I would like to recommend that the flexibility in that labor market continues to be increased. That's what I will ask. Thank you very much.
Okay. Very good. Thank you very much. I think with that we conclude our session. I would like to thank you all for your input and participation and interest in being here with us in Saudi Arabia. As we have seen, I think the opportunities are endless. Every one of you really brings a different angle, and for Aramco, we are really looking forward to partner with you and push forward to meet the ambitions of Vision in 2030. Thank you all very much.
Thank you.
Thank you.
Thank you.
Are we? Oh, we are. Our mics are on. Ladies and gentlemen, esteemed guests, it's my pleasure to be here at FII for what promises to be a really exciting panel. My name is Jane Witherspoon. I'm the Bureau Chief for the Middle East for Euronews, and I will be introducing my guests very, very shortly, our panel that we have for you today, and where we're going to be talking about tech for equity. Now, the world faces a wave of future financial crises, and the bottom half of the world's population possesses just 2% of total wealth, while the richest 10% controls 76%. Women, I'm pleased to say that we're a female-dominated panel today. I'm sorry, Jacques, but you're in the minority for once. Women earn only 1/3 of the global labor income, and millions of people worldwide face the threat of insolvency, with global household debts reaching $300 trillion. So we're going to hopefully find some solutions, have a nice discussion. So I will, without further ado, introduce our panel. To my left, we have Dr. Jacques Attali, President of Attali Associates. Thank you so much for joining us. Fatma El-Shanoui, Co-founder and Chief Strategy Officer for Kazna. We have Dr. Saeeda Jafar, General Manager for the GCC for Visa. Hello and welcome. And last but not least, we have Ambereen Musa, CEO of Souq Al Mal. Thank you, guys. I wanted to start, Ambereen, in terms of new technologies, solving age-old systematic challenges to create a more equitable world, you have a bit of exciting news that you're going to announce today, don't you, in terms of the technology?
Oh, absolutely. I'm not sure about announcing today, but I do want to tell you a little bit what we're doing from our side concerning technology, education, and closing the gap between the rich and the poor. To my belief, it's all about education.
Sure.
Right? I think the education is the basis of it all, from closing the gap between the rich and the poor, but it also allows people to empower themselves to take the future into their own hands. And the more education you have, the more knowledge you have, naturally that goes into closing that equity gap. During COVID, a little story, during COVID, we, as I'm not sure how much of you know, but we sold, Souq Al Mal got sold to Showa Capital, got acquired 4 months ago, and at the back of that acquisition, during the COVID period, we had calls from CEOs saying, listen, you guys are very well known for financial education in the region. We've dropped salaries by 30%, and people are taking their kids out of school. People are losing their jobs and losing their mind, being very less productive. But more importantly, they're losing employees to competitors for $200, $300 of salary increase. That brought a lot of thought process into our minds, saying, well, there's obviously a huge lack of education and awareness when it comes to personal finance. And so the news I have today is we've decided at the back of that to build the first financial wellness platform in the region. That entails 4 different verticals. The first one is education, everything from budgeting to asset allocation. The second one is connecting you seamlessly to credit. The third one is robo-budgeting, that I call it, where we spit out a budget depending on who you are and what your current level of spend is. We connect to all your banks. And the fourth one goes into wealth management. So at the back of that, when we talk about systemic challenges, it is all the basis of education, and we're trying to build a platform that is here to stay through corporates for every employee to pick up on, and hopefully bring that level of education awareness in the region to a very different level.
Jacques, you are very, very keen and an advocate for the importance of education in any level, not just financial education. Why is that such an important foundation and start for everything?
If we want to fight against inequality, education is the key point, and you're right to say so. There's nothing but education. I must say that education is one of a single sector of innovation which is able to reduce inequalities while a lot of other sectors of innovation are increasing inequalities. If we look at the past, whatever is linked to a communication, a printing machine, the mobile phone has decreased inequalities, but the other innovation have not, because the other innovation have created wealth for the wealthy, and before they spread, another innovation come and create a new advantage for the wealthiest, and then it's why the wealth is accumulated in a small number of men. Only education and communication are technologies where you can have a chance to reduce inequalities, but not sure. As we speak, EdTech is just good for people which have the means to have it. We have a family to support them, who have a good environment in terms of health, human rights, access of women to education. And then it's mainly also a question of out of innovation of rule of law as a key for using innovation for reducing inequalities. And in that sense, education is a must. Even as we speak, education is on the contrary a way to help the richest to have a better access to best education, best universities, and is increasing the inequalities.
You touched on something there in terms of the innovation and the technology moving at such speed that, you know, by the time that it is generalized, you know, it's moved on.
Yeah.
I mean, surely that's just part and parcel of things developing, but how do we keep up with that then?
We should not forget that the best way to get equity is tax
Okay.
and transfer.
Sure.
If you let people accumulate wealth without organizing transfer, whatever we say is peanuts.
Thank you. Saida, why is it important at the end of the day for people to be financially literate? We mentioned some of the statistics earlier. You know, why are they being left out of the traditional financial fold?
Sure. That's a very important question, right? So there are many statistics everywhere that some of them very scary statistics that say in many traditionally developed economies, emerged economies, as much as 2 out of 3 people are considered to not be financially literate. So 2 out of 3 not financially literate. There is equally a lot of data that shows that for a lot of adults who we would consider as not financially literate, their economic certainty later on in life is a lot rockier than for those of us that have that understanding, that know what it means to really and truly manage their money well. Given this, if we think through this and we play it out further, what does it mean? If a large part, if 2/3 of an economy lives in a state of economic flux, how does that economy thrive? How do you make sure you're focused on solving the real challenges? And how do you make sure you're progressing and you're innovating and tackling some of the issues that really and truly exist? So that's why, from our perspective, we are fundamental believers of economies that include everyone, uplift everyone. And it is incredibly important to make sure that there is a focus on financial literacy, financial education from very early on, to make sure that we continue to innovate and perform at our full potential.
Well, Visa have a number of initiatives as well that you roll out globally to encourage that positively. Can you talk me through some of them?
Absolutely. There are a number of things we do, and innovation is very dear to our heart. We are, globally speaking, we are the world's first fintech ever. We were established many years ago, and we are the world's first fintech. And we are constantly innovating as we go forward. So some of the ways in which we have been trying to open up innovation is, for example, something called Visa Everywhere. This is an open innovation platform where we invite entrepreneurs from all over the world to come and share their ideas. And based on their ideas, we will then create, let's say, the right avenues for them to pick some of them and then to coach them, mentor them, even help in many ways. We've recently done one in Saudi. So just a few months ago, we had our first one in Saudi, yes, and it was fantastic, and we hope we will continue to do many more. Yeah.
Fantastic. Fatma, you're coming at things from a slightly different angle and target audience. You know, your business really looks at mid to low income, not at the bottom, but quite close to there. If you're giving access to financial services, how do you do that responsibly so that people aren't going to get themselves into some serious debt moving forwards?
Sure. So I'm just going to take a few seconds to paint a picture of what our target user looks like. So that's the typical mid to low income, someone who lives barely paycheck to paycheck. So whenever an expense comes up, and that's quite frequently, they just don't have the means to pay for that. So it's what we're actually doing is bridging a liquidity gap. So what they're doing in the market now is going to family, friends, and even to employers to bridge that gap, because the best they have when it comes to access to financial services is a bank card where they get their salary transfer. But that's pretty much it. They don't have access to credit, they don't have access to savings, they don't have access to the full range of financial products. So we come in and we bridge that gap in a way that's transparent, that's convenient, that's simple, that works for them, but in a digital-only solution. So I think without the tech component, it wouldn't have been possible to reach the users that we have right now, because we're targeting millions, and we're just scratching the surface. And we're seeing this problem across the entire region. So we started in Egypt, but we're also expanding across the region because it's happening everywhere. I think when it comes to doing that responsibly, so the way we've thought about it is with stacking different products that really have an impact on the user and their lives and their families as well. So we started with the cash side of things just because that's the big need in the market where we operate. But we started also having bill payments. So, you know, they have to pay their utilities. They don't have the money to pay for it. They do it instantly in app. We started doing things on the buy now, pay later side and stacking things that are more relevant. So we're doing things like with our partners, we're doing medical insurance. So then when they're able to insure their families, medical expenses don't just ruin the entire month for them or the entire, you know, few months for them. So that's how we're tackling this. In a way, we're educating them, but we're sort of gamifying it for them, or delivering value through that gamification process or that education process, so then it would make sense for them.
Let's talk regulation. What is needed in terms of a successful financial equity strategy moving on from that? Because I think you've witnessed what is in place in Egypt, and now you're expanding here in Saudi. Can you talk me through that?
Absolutely. So when we started late 2019, it was really the idea that this problem has been in the market for so long. We've grown up with this problem, but we thought it was the right time because from a user perspective, they're digitally connected in a way that we've never seen before. But more importantly, from a regulatory perspective, the regulator is very progressive, and financial inclusion was a top strategy in the country. So with that came a lot of regulatory frameworks, and with that also was a mind shift in how things were perceived by the regulators. So it became the idea that we're going to do this with the support and the cooperation between the fintechs and the banks. So the fintechs are out, we're out on the ground, we know our users, we do all these offerings and things for them that an incumbent would shy away from doing, but we have the support of the incumbents and the banks from a regulatory perspective. And the regulators are sitting with us, you know, talking about new regulations, introducing sandbox, keeping us involved in the conversation, looking at different regulatory regimes and different things that have been done in markets across the region and globally. And we're seeing the same in Saudi. So just, you know, yesterday there was a big conversation around open banking. There's the wage protection system all around the GCC. And what that gives us when it comes to financial inclusion is it gives us data that allows us to provide services and stack the range of financial services on top of that in a way that's affordable.
Jacques, I think you tried to get my attention. Were you wanting to add into?
Yes, because I was not aware that we are going to discuss financial services, but in one of my lives I worked and I founded an organization who worked for more than 25 years in microfinance in more than 60 countries.
Yeah.
The name was Planet Finance, and now it's Positive Planet. And I think everything you said is right. When we began, there was only 5 million people using microfinance in the world. Today we may say that 500 million. Regulation is a must, absolute. Education is fundamental. But there is another issue that I advise you to add to that, which is the fact that there is a contradiction between fighting for equity and climate.
Right.
Because if you move only to help people create their own job, without trying to understand what kind of job they are going to create, they may create dirty jobs, dirty entrepreneurs, bad food, waste, without any waste control. And then I urge you, and it's what we do in this organization, only to try to focus on creating what I call positive companies, positive SMEs, screening not only the fact that they are sustainable financially, but also sustainable ethically, sustainable politically and socially, and sustainable in terms of ecology. And that means that a lot of small business that are created should not be created because they worsen the situation. And I think that in the long term, when people globally will have a choice between fighting climate change and fighting poverty, if we do not reconcile the two goals, they will choose fighting climate change and not poverty. And it's why we must transform fight against poverty as a tool for a better climate situation and not as an enemy of climate control.
I think Amberine's got something to interject there as well.
So the interesting point that you brought in was without tech, you wouldn't be where you are, right? The company wouldn't exist. And of course, technology has allowed us to really build up our audience or customer base. But I think we should actually take a step back. 75 million Americans still don't have broadband. So I think the issue doesn't just come in education and technology and what we can do, but it goes way back where it's great to have technology to democratize education, if I said that right, which is what we are trying to do. But if you go back to people who don't even have access to broadband, that's just getting them worse and worse and worse. So to actually close that gap, I think there is an added, to your point, an added problem that we should probably add on the list, which is, let's think about the governments and the private sector and the investors who, first of all, needs to understand and figure out how to build infrastructure, especially in rural areas, in the US, in Africa, in emerging countries, it's even worse. But I think there is a step back we need to make and say, how do we build and how do we fix the infrastructure problem before we try and democratize financial education, all the ed techs and the fintechs that's coming through. What we have seen during the COVID, if you just look at students, for example, during COVID, the number of students that could not actually go to school. Everything went online, but broadband or laptops or internet was just not accessible. And that's where I think, the danger is you've got the bigger and bigger equity gap through the market.
So how do we solve that, that accessibility issue?
And I think that's where you need to bring all stakeholders. I think, Saida, you mentioned that earlier on. It's everybody getting together. It's not just investors. It's not just the startups. It's not just the fintech. It's the governments, the regulators, the telco companies to build broadband where it needs to be done. Now, how do they do that? Do they need to be subsidized, or do investors need to start looking at social impact investment? And what does that mean to them? So I think it's a convergence of regulators, investors, startups, fintechs, all together to first build infrastructure to make sure that people have access to the internet, as simple as that, and eventually then move into.
If I may add something to COVID has created a disastrous for long term.
Yeah.
Because people have not, as you said, been in position to go to school, but figure is that more than 40% of people which have not been to school for 18 months didn't go back to school after. And 80% of these 40% are girls. And a large part of those girls are going to get married very young, which means that they no education and they will not be in position to help their children to be literate. Therefore, this 18 months lost at school create a disaster for 50 years. For the whole of Africa mainly, part of India, large part of Mexico and many other countries. And it's almost irreversible, almost irreversible.
Well, this is obviously the theme of the conference as well, and when we're looking at humanity and how to make things better, I guess there is that issue of who is responsible and how do we take control of that and make things better. And I wanted to say to Fatma, how would you like to see us creating a financial ecosystem We're talking about people not even having access to the internet, and on the other hand, we're talking about fintech and AI, which sounds ridiculous. You know, in your eyes, what's the best way forwards when we're looking at the future technology?
I think one of the positive things we've seen from our perspective with our users is because of COVID, there was people were more aware of the importance of digital. So we saw more people coming into getting connected. I mean, from an infrastructure perspective, whether it's here, whether it's back in Egypt, the infrastructure is there. It's accessible even in the rural areas. You know, we have people, parts of the team who go and, you know, onboard the users wherever they are across the country, just to get them educated that face-to-face interaction as a first initial starting point is important for our user segment. But the connection is there. Sometimes it's a matter of financing that first smartphone ever. Sometimes it revolves around that. Sometimes it's education or the concerns around how do I use that smartphone? I've never used one before. But from an infrastructure perspective, I think it's there, at least in Egypt. In Saudi also with the introduction of Tawakkalna, because you know you need to get access to your work through that. So that made smartphone penetration really pick up in Saudi. So that's from our perspective the positive side of COVID. There've been a lot of negatives, but there's also positives. So I think that's there, and our role at this point is to create value for the user. So we're seeing from an infrastructure perspective when it comes to finance, a lot of new infrastructure that's being developed by the regulator as well. So Egypt, we just kicked off our instant payment network, and that's an infrastructure that allows peer-to-peer transfers instantly, 24/7 across all sorts of accounts, which we didn't have before. We're seeing here in Saudi, like I mentioned, the open banking, which allows just a lot of inflow of data. So I think with that sort of evolution of the infrastructure and being aware of what's going on around the world, not just in the region, but globally, and bringing that home in a way that works for the users and allowing the fintechs to really develop something that works for the target segment. Like, we know that the things we develop for our user doesn't work for everyone, but we have a user in mind and we think about their problems, we think about their journeys when we're developing that product, when we're developing the communication for the message to get across to them. So I think that's really going to be the way forward for bringing more people into the system.
Saida, you talked earlier about the kind of ecosystem and the initiatives that have driven a lot of your research and rollouts over the last couple of years. You know, what has been the most challenging part of that, and what would you say was the biggest thing you guys have taken away, Visa as a company?
Sure. So I think the biggest theme in a lot of, frankly, what we've talked about and what we also see is every situation is different.
Yeah.
And every situation, while we have a common set of tools, the solutions are extremely specific. And what may work in one place and one setup doesn't necessarily work in another, right? So you gave a great example, 70+ million Americans that don't have access to broadband, to the internet the way we would like. But equally, if I look at some of the most populous countries, the way internet has fared in China or in India, and the way, especially digital payments have taken off in those countries, it's completely different than how it has happened in other parts of the world. So it's not linear. It's absolutely not linear. Each and every situation can have a very different solution. There is an ability to leapfrog. And the point is that instead of trying to force-fit a solution that may work somewhere else, build on what exists and build on what are the, as you said, some of the most fundamental and some of the most pressing challenges that exist. And I think once you get that baseline right, you can then keep continuing to go on and to keep taking steps from there.
Jacques, would you say that we can future-proof from forthcoming financial crises?
We are what?
Can we future-proof further crises?
Of course not.
Can you enlighten us?
Of course not.
Yeah.
The future crisis is there. And the reason of a crisis is linked to the fact that people, mainly men, I must say, procrastinate. When there is something to be done, they say, let's wait, we'll do later. And the best way to say we do it later is to print money. If you print money, you give time and you say, we wait. And then the central banker print money, the politicians say, well, I have time, then I do nothing. And then everything is ballooning and we have a crisis. The crisis is the consequence of procrastination, and it's a traditional kind of course, financials will go on, at least as long as we don't put in place a real global architecture with sound, lucid analysis of what is scarce, what should be spared, what should be invested, which is far from being the moment.
This is definitely promoting women in politics. No more procrastination, more women.
More women. You're saying that because you're on a panel full of women.
I
I mean, this is probably a question for all of you. Actually, you probably all want to chip in at some point. But how can investors help reduce the digital divide?
Help what?
How can investors help reduce the digital divide?
By all means, we should have that criteria in mind. Personally, when I'm looking at an investment, I ask myself, is it good for climate? Is it good for equity? Is it good for human rights? Is it good for women parity? I ask all these questions. Is it good not only now, but in 10 years? Because an investment is for more than 10 years. Then I dream of a world where every one of us, when we buy something, when we save, when we invest, when we vote, if we vote, we will have all those questions in mind and not make any decisions without doing that. If all investment funds in the world, FII as well as private investment funds, have that question in mind, screening through indexes, and it's beginning to come, but it's very slow, then things will change. It has to be a global new behavior in front of decision making.
Yeah. Amberine, do you agree with that?
Yes, I wish I had the same dream, but I'm not there yet. I'll get there at some point.
You're not there.
Not there yet. Having said that, I think the first question for them to ask, or investors should understand in the first place, why it's good for them that they're actually trying to help close that divide. I think the bigger the divide, the more impact it has on a macroeconomic level. The more divide you have between the rich and the poor, the more it creates political instability. The more political instability, the more issues you have in investments, and it's a long-term issue that a lot of investors face. Now, I don't know, and I'm not sure whether that comes out when investors do invest. Do they think about the macroeconomic side of things from the issue of a digital and the economic divide? I'm not sure yet, but I think that's probably the first question to ask. And I agree with Jacques, is one of the areas they should be looking at is, what are the KPIs of this investment? What's the purpose of this investment? Is it just financial returns? Or can we start regulatory-wise putting things like, it's not just financial return, but it's also socio-economic, it's social impact, it's level of education, level of awareness, connectivity in a country could be one of the areas to build investors to try and close that divide.
An investor will understand that it is in their interest to be altruist. It's why I call selfish altruism. You have an interest to be altruist because, as you said, if you create a world where people are all affluent, that's a more stable world, you have more potential consumption and growth. Therefore, it is an interest of the wealthy people to fight against poverty. Hard to understand, but it's absolutely fundamental. Selfish altruism.
Yeah. We're talking quite on a global scale there as well, but obviously if I throw this over to Saida and Fatma, you're very much GCC closer to home. Are you seeing things from a different perspective here?
Yeah. So I think the one thing I would add to that is, yes, while the investors have one view and they will look at it, and there are other factors as well, I think we equally have a very important role to play. We as individuals can also put our hands up and say, hey, this is important to us. And this is something that we also demand. That's one part of it. But I think equally on the other side, a lot of us individuals, entrepreneurs, is also up to them to make sure that there are creative solutions that come in and that address some of the challenges. Because what investors, at the end of the day, they're there to make a return, but they need supply and they need to be maximizing a demand of something financial, but also others. So I think it's also equally up to us to be able to make our voices very clear in terms of what is important, and then also be able to put our work behind what that is. In the GCC, we are starting to see a lot more awareness and a lot more push towards social causes and towards creating social enterprises. And like most things in the GCC, once they pick up, you see them accelerate. And you see them taking form very, very quickly. So I think if we have this conversation in the next year or two, it'll be a very different outlook than today.
Fatima?
I agree 100% with Saida. I think it's a shared responsibility. From one side, investors making this a priority, but realistically, to expect investors not to look for returns is just unrealistic. So it's our role as individuals, as entrepreneurs, whether that's someone in a startup or a big corporation or anywhere, to think about the creative ways to solve big problems in a sustainable way, in an economic way that works for, for creating a company and works for investors as well. I think in the markets where we operate, or in emerging markets in general, there's a lot of very interesting problems to be solved, and there's a lot of creative ways to solve these problems. It's not linear, just like you mentioned. Every market has its own dynamics, but that's part of the rush of it, and part of the interesting part of doing this day to day is you got to figure it out in different markets. There's a lot of synergies, a lot of learnings shared, but every market is unique, every problem is unique. But we have a lot of them, unfortunately, but it creates a lot of opportunities that I think would work for both, building a business, but also from an investment perspective.
Yeah. I think just to add on to that, so I get the point where it's unrealistic to ask investors. Having said that, though, it's interesting to see how governments and regulators in the last few years have really, and they've done that on the whole climate change story, and that's going to be moving on. I believe that's going to be the next step for the financial education and awareness and literacy, where you start getting tax incentives if you invest in certain companies or tech companies or ed tech or even infrastructure that actually helps reach a certain economic goal that the regulators have. So I think, yes, I agree that the financial returns is a big part of it, but I do believe the ecosystem can build up different reasons and different KPIs or returns, type of returns.
Yeah, so I don't think they're necessarily mutually exclusive. So if I think about us, we are a purpose-led company. We have a very, very, very clear vision of making sure we're bringing individuals as well as small, medium enterprises into the financial fold. And this is something our chairman and CEO has talked about at length, and it is something that is in a long-term plan for us, and we are working towards it. At the same time, we are also a very financially responsible company, and we have investors as well. So I don't think they're necessarily mutually exclusive, and I think it's, as you said earlier, it's up to us as individuals to find the right models and to make sure that we're able to somehow marry the two and do what we think is the right way.
And build the awareness as much as we can.
Absolutely.
And I think also, like you mentioned, the government and the regulator plays a role, because if investors are long-term investors, the regulators are there for good. So they're the ones seeing really the long-term view of things.
Lots of food for thought, ladies and gentlemen. We're going over time, so we have to wrap there. But Your Excellencies, ladies and gentlemen, esteemed panel, thank you so much for this conversation. We'll take it backstage.
Thank you.
per 100,000.
Good afternoon, ladies and gentlemen. This is Dr. Najwa Al-Ghamdi. I'm a data science lead at the corporate analytics and data sector at STC. I'm so honored and happy to be here today to moderate this session on a very exciting topic on data-driven the world driven by the data. So before we start, let's revisit an interesting notion that most of us are very familiar with, that data is the new oil of the digital economy. And this is to some extent can be true. However, if we think about data, unlike oil, it's basically not finite. We are generating data on the go. And as of today, the amount of data that's been generated, stored, and processed are basically reaching to up to 100 trillion gigabytes. And with this enormity of data comes one question. How can we get the best out of it and make benefits so that we could actually help the society, the industrial growth, as well as the whole world? And with the enormity of data, definitely come enormity of opportunities. As we have witnessed a lot of paradigm shifts, we have new businesses have been changed, and also new industries have been reshaped. But at the same time, there are enormity of challenges. For example, do we have the right infrastructure to process, save, and make sure that we generate the right insights? And do we have there is also the question related to the legal and the ethical considerations. Who owns the data? Can we share the data? And does the AI model actually trustworthy so that we could generate trusty algorithms? All these questions will be raised today with our esteemed panelists who are coming from a very diverse background and will help us actually to enrich our understanding on data economy and to reimagine how the data economy will be in the future. Please join me to welcome Engineer Haytham Al-Faraj, Group CTO of STC, Engineer Abdurrahman Tarabzouni, the CEO of the Saudi Technology Ventures, STV, Mr. Ping Jin, the co-founder of Enreal, Mr. Josh Harris, the EVP of Palantir Technology, and Dr. Janet Versenberg, founding member of the La Familia VC. Thank you so much for being here today. I'm so honored and glad. And throughout this session, I'm going to take you through a journey of 3 stops. At the first stops, I'm going to ask each one of you, how did you see data changing the current business model from the industry that you come from? And I will start the question with Mr. Al-Faraj about a very important sector, which is the telco industry. And the telco industry, specifically the operation in the telco industry, is considered one of the most complex downstream tasks or business as usual. And there are many evidence that see that AI could really help to optimize these operations. From your point of view, Mr. Al-Faraj, how do you see AI and data could change the face of the telco industry today?
Thank you very much, Dr. Najwa. I'm extremely delighted to be here with you and with the rest of the team on that discussion panel, touching, I would say, in a very important, I'm not going to call it a technology trend, rather than a science that has been evolved over years. And maybe looking into AI from a telco perspective, we have seen a major evolutions on the use of AI and the development over the past years. And the use of data in the telecom industry has been there for the past 2 decades. But I think the last 6, 7 years, there was a lot of evolution and development on the use of AI, moving, I would say, from a normal data processing and generating high-level insights into much more advanced algorithm. And the opportunities that has been given for telcos and operators globally are generating huge amount of data. Due to the fact on the digital ecosystem that has been expanding and evolving across multiple industries, that makes the use of AI and the value creation is a continuous process. You refer into the oil, the data is the new oil for industries, due to the fact that this important digital assets is infinite because value creations continues. We start seeing, specifically in STC, major contribution of the use AI and advanced analytic use cases into the day-to-day activities that we do and the way that we generate insights, drive decisions. big percentage, I would say 40% of our operational activities today on the way that we manage customer experience and optimizing the existing networks go through an advanced AI capabilities. We have seen as well big percentage of AI use also from a business side when it comes for service creation. Personalizations, we became a trend in the telco in providing customer experience and very value differentiated product portfolio to our customers, not to mention into decision-making process that we use in data to drive our strategy and we move forward. And there are a lot of examples that we probably can go through on how AI and advanced analytics have helped STC to accelerate its strategy and maximize the value of its shareholders and customers.
Amazing. Since you tapped on this strategy, how do you see the importance of having a very clear AI and data strategy in an organization?
I mean, majority of the organizations, they start tapping into what they call data-driven strategy, and this has been started in 2016. And during at that time, I think we were not really determined at that time how we're going to evolve in analytics. But the big portion, the big factor on taking that decisions, we believe at that time that this is a future must capabilities that have to be designed not from a technology perspective, but from an objective perspective.
Right.
And that's why we have evolved in our initial version of the strategy that looks into talents, that looks into technology, that looks into an ecosystem that can export those data and generate value out of this. And the most importantly is the data governance and the privacy, which is essential to make sure that it got also giving the right attention priority within our AI and data strategy.
Amazing. We will tap onto the data governance in a later question. But moving to Mr. Harris, and I've seen a lot of work that your company, Palantir, did in the age of COVID. And capitalizing on that, I believe that the value of data become maximized during the crisis and as well as the disruption of the disruption that could happen. How do you see data could help to maximize response during crisis from your experience during COVID?
Sure. First of all, thank you so much for having me, and thank you to Saudi Telecom for this panel. I think what we saw during COVID and what we've seen during previous crises is that the importance of data becomes paramount in that you need visibility into what you're able to do and what you're unable to do. So if you look at COVID, for example, there are very basic things that people and medical professionals and government officials needed to understand that lived in separate data sets. So the data was totally siloed. So number of patients, PPE equipment, even number of beds available in the hospital, personnel shifts, so who was working when and how, and so what would happen if those personnel shifts got interrupted by the personnel themselves getting COVID, which was a huge factor during the crisis. So believe it or not, all of that information existed in separate systems. So in order for a government official or a hospital administrator to make any effective decision on where to distribute PPE equipment or where more hospital beds needed or where should respirators be going, what areas are in most need, it actually took a very advanced technical system to overlay all of that data together and make it in one place so you could have a dynamic system. Because obviously a pandemic is a dynamic event. Right. It's changing all the time, and you can predict some of it because you can see trends, and epidemiologists were very helpful with that. But you then need to follow the trends with, okay, we see it's headed in this direction, we need to be able to support that. And that was the same with vaccine rollouts, and we see that in other areas as well. So sadly, you often need a crisis to understand why data hygiene and data transparency is so important. And COVID-19 was sadly one of those crises.
Thank you for that. Going to a third dimension, which is the investments. And this is a very interesting question, seeing how organization basically started to develop or make the decision-making more data-driven. And this question to you both, Mr. Trabzoni and Dr. Württemberg, about how do you see data could help investors to derive smarter and better decisions? Starting with you, Mr. Trabzoni.
Thank you. Thank you to SCC for having us here. It's a pleasure to be among all of you. I think, Dr. Najwa, something you mentioned at the beginning, I'd like to underscore is we're dealing with infinite amounts of data. We're dealing with a lot of signals, We need to understand the signal-to-noise ratios and everything we do on the, as investors, when you look at deals and we look at what's going on in different landscapes, but also within our businesses, when we look at all the opportunities we see and the data we have and they're accumulating over time, it becomes really hard to understand where value resides, even if you're capturing all this data and make business decisions on top of it. So it cuts across both layers, I guess. One, there is a lot of data-driven decision-making that happens for us as an investing firm, but also there are a lot of opportunities that we see in our portfolio companies in which data becomes a huge enabler for value creation. But I guess to answer your question, when I look at the landscape, I take a step back and we always talk as a team about the production side and the supply side of things, and then the consumption and the demand side of things. And if you look back, I guess industrialization was all about, you have a unit of consumption that is taking on a unit of production, and it's a one-to-many approach. You get everything the same, you consume everything the same way. And you saw the first instance of the Web 1.0 and the 2.0s, just Yahoo is a static page. Everyone in the world sees the same page, consumes the same things, and moves on. And then they evolved and they kind of had this, many to one. So it moved from one to many, and then many to one, in which a lot of these companies started building different parallel, versions of what they can give users, and then determine to their best ability which version of these manys to throw at that single user. Right. And now we're moving to this world in which a lot of these trends are manifesting what we call a true one-to-one matching on any kind of service or product to that single user who wants it. And I guess that's the common theme we look at when we do investments, is we think that over time, technology is going to enable the movement of products and services closer and closer to the point of demand. And this is driven by data. So data is going to drive all of this. And we have this today in our portfolio companies in many ways. So you think about, take even a sector level. So we think of education, and we think it's totally broken. 30 students in a classroom getting the same content at the same pace doesn't make sense. We look at Noon Academy, and we invested in an ed tech company that's rethinking education in a one-to-one fashion, matching great teachers who develop content with students, and then looking at measurements of how the students consume this content and catering it over time. You look at healthcare. Healthcare is very broken. Same thing. You go into the doctor. There's very little history on what kind of meds you were on, your diagnosis. And we invested in a health tech company that's essentially doing digitization of healthcare. But I guess that's the sector view. There are lots of broken industries in which digitization has happened only within a thin layer, but a lot of data is now coming in to provide customization. And this is essentially a theme we're investing behind. I think I'm going to close with the fact that a lot of what we call data and data-driven decision-making in economies, and even value creation, is very basic to human nature. So the best story I have about this is, I was talking to someone at Google who was building their fintech infrastructure. And I'm like, so what's going to happen? How are we thinking of the world moving forward in finance and banking and payments? And he's like, listen, all of this is very common. It's back to basics. And I'm like, what do you mean? He's like, what we call data and decision making and analysis and synthesis and customization to the user is basically what you and I and our fathers used to do and our mothers used to do way back when we had no technology. And I'm like, say more. And he's like, listen, he's of Arab origin. He's like, when my mom was in Egypt and she used to go down to the store every day to buy something off the grocery store, the seller would greet her and say, hello, Muhammad. That's customization. The bag of peas you wanted yesterday actually just came this morning. That's analysis of data and recommendation engines. Number 3, I will send it to your house. He has knowledge of where you live. He has history of transactions. And by the way, I'm going to keep it on the tab for you. You can pay me back later. So that's consumer financing, credit scoring. And he's like, listen, look at this simple interaction. It has all this
massive amounts of data, but we used to be much simpler, people, and we had this one-to-one relationship. And now this is what's going on. We're using technology and leveraging all this data to go back to basic human interactions.
Fantastic. I think this is a great example of how would you really humanize the whole interaction by just relying on data. Going to you, Dr. Versenberg, if you would like to comment from the same perspective on how do you see the data help you to make better investment decisions?
Yeah. Thank you so much, first of all, for having me. It's such a beautiful event. And I think what you said is actually very true. I think let me maybe segment it a different way. I think one way we look at the market currently is from a horizontal perspective. We have more and more data that is surfacing to end users, and we have just very limited amounts of people that can actually make sense of that data, right? So I think a lot of things that we are currently seeing is how can we enable normal business users across different applications and various segments to really get a more intuitive grasp of what is going on, which is, I think, one of the key things we need in an ever-shortening labor market, an ever-tightening labor market. So that is one thing we see across enterprise as well as SMBs, which is I think, even more important market in Europe than it is elsewhere. I think secondly, and that is maybe a vertical that is very specific to Europe, in the industrial space, we are yet to move from the space of atoms to the space of bits, right? There is data, but data is often siloed, as you said, Josh, but it also sometimes isn't even properly captured, right? So I think the way we look at the industrial space specifically is trying to understand where do you actually need to tap on data streams that can actually have a meaningful impact in terms of ROI on the given company. And one example would be one of our portfolio companies called Palico, which is actually an offspring of Palantir engineers that really actually leverages data for real-time supply chain, bottlenecks in the manufacturing across very, very many large enterprise companies, and really making sure you smooth out operations, which is a very important bottleneck for most people or most companies in the current time. So I think that is potentially one example where we're just seeing how fast data can really have a meaningful impact on what is a core deliverable of any company. And in general, in the industrial space, what I would say is that you basically look at a four-dimensional spectrum. You basically start with just sheer tooling, right? Making sure you kind of give them the tools to start somewhere. Then you go on to some augmentation. So how can you augment people to do a better job in a given role, over to semi-automation and full automation. I think on that spectrum we're still very much in the lower half when it comes to really comes to leveraging the full potential. But I think it's probably 3 to 5 years out for us to really be able to harvest a lot of the data-driven insights that are just building up from the bottom sphere.
Thank you so much for this great insights. And going to another dimension or vertical that it is very, very interesting, which is big data, be it the next gen of interfaces. And for you, Mr. Jin, as a co-founder of Enreal, coming from an industry of the mixed reality wearables, how do you see the intersection now between big data and augmented reality?
Well, I think data represents a particularly interesting topic for us. There are two things here. First of all, I think we've done a really good job over the past 3-4 decades condensing and digitizing the real world and putting everything on a 2D screen. I think we've done that extremely well. I think with emerging technologies like augmented reality, virtual reality, what we're doing is that we're bringing the internet and throwing it back into life. So, we call it spatial internet. I personally feel that spatial internet really represents a major technological upgrade in the next maybe 2 to 3 decades. It could be the most important technology that we're dealing with. And second is that when you wear glasses, there are technologies for tracking your eye movements. So we can read your mental state. We can understand if you're focused or not focused. Or we can understand if you're fatigued or not. And you can also build sensors into the glasses, and when it comes touching your brain, I wouldn't be surprised if technologies evolved to the point where we could really interpret some simple signals that your brain is processing. So I think when it comes to augmented reality, you said we now have 100 trillion gigabytes. I don't think there are enough zeros to count how much data we're going to have.
Exactly.
Once we enter the spatial internet. I think, you are going to be able to get access to so much more personal data compared to just your mobile phones and sensors on your mobile phones when you have glasses. And, that's going to raise a whole lot of questions when it comes to governance, when it comes to data privacy, when it comes to how to make best use out of these data. I think we're only just scratching the surface of the applications of that. We've seen applications being built on our glasses, to augment medical surgeries, to help with, educational purposes and all that stuff. And everything is so customized. And I am completely on board, that I think 30 people in the same classroom reading the same material makes absolutely zero sense. I think spatial internet is where personalization, where data-driven personalization is going to be at its best.
Fantastic, and I like the term of spatial personalization. And from here, we will move to our next step, while we would like to understand more about the pillars of the data economy. Here we will focus mainly on investments, the legal frameworks, as well as talent if we have time. I will start this question to Mr. Al-Faraj about the one important topic when we speak about the data economy, which is the localization of AI and data supply chain. And by that I mean the infrastructure, the data centers, and all of these enabling, technologies. How can we really, what sort of investment that companies or corporates really need to look at when it comes to enabling their internal and external capabilities?
So maybe let me start probably from a telco standpoint of view, or from the operator time. I mean, when we look into these two dimensions, especially in localization and supply chain, supply chain triggers an important fundamental building blocks for telcos really to evolve in their AI strategy. And this is what we have done in STC on the investment that we do on expanding our data center footprint in the kingdom. Because we believe that there will be growth in data, there will be continuous expansions to meet customer demands. And out of this, we also complement these data center with computing and infrastructure development that we do to make sure that we accelerate lots of the advancement of the technology that we do, whether in the servers, in the storage, and other areas. Not to mention looking into data governance, we go back into the investment, we need to make sure around cyber security and data protection. And these are very important dimensions and enablers into our AI landscape. And these has been taken into STC strategy into considerations to make sure that we evolve, because I believe on the long run there will be a continuous speed between human intelligence and the way that AI is being developed really on the way forward. Speaking around localization is important as part of what we do. And when we look into localizations, we look into the important dimensions on any successful AI or data strategy, which is the human capital. Right. And this is something that we made sure over the past years, that continuous investment, training developments, and giving exposure to the existing team that we do in STC. And as a matter of fact, just to indicate that, or maybe refer that 80% of our advanced data scientists today are Saudis. Yeah. That has been developed over the past 3-4 years, which we believe this is important because, as you just rightly said, the aspects on privacy, data governance, and as you advance in your journey and the use cases, the localization aspects became an extremely important. As a matter of fact, beside the development that we do in our internal human capital and capabilities and talents, we also design what we call an open system and an ecosystem around partnership that can evolve into what we call crowdsourcing, because we believe that the different data sets that sets in different industries can be mimicked and can be really extract much more values. So that crowding sourcing model is extremely important. We were able really to establish partnership with academia, for example, either overseas or in the kingdom. We have also established partnership with different operators, because, and maybe to reflect what, what the team have said around the use cases, I think the thoughts and the minds and the minds and the ideas that sets across multiple people when designing or fixing a business problem, this is what drives value. It's not a technology, it's not a date, it's how fast that you process your data. It's how can you bring or probably group different expertise from different industries, whether probably Mr. Abdurrahman are talking about the financial industries, and how you link into this example into what's happening on the global space to create much more of insights on that aspect. Localizations, supply chain are important aspects of any AI and data strategy.
Thank you so much for this valuable input. And since we are talking also about the investments, this question to you, Mr. Trabzoni. And first of all, congratulations for the great news that we heard today about the 300 million investments that have been added from STC into STV. And giving these sort of investments, how do you see the next wave of investment is happening in AI and data?
It's a great question. First, we're very thankful for the vote of confidence by STC. This doubling down on the STV platform is something we're extremely proud of. We're proud of the partnership we have built with STC over the past few years, and we look forward to doing a lot more. This increase in investment is actually part of our thinking that this region, and Saudi Arabia in particular, is poised to become a technology launchpad for the broader Middle East and North Africa. We believe that the country has made tremendous efforts to essentially invest heavily in infrastructure, led of course by SCC, connected what is essentially a whole continent with very advanced technologies for connectivity. You then have a very robust and active layer of digital participants on top of this infrastructure who are digital natives, who have very high purchase power, who are spending a lot of their time online, virtually, spending online and living online. And third, and more importantly as well, you have in Saudi Arabia what is considered the deepest capital market in the Middle East that can fuel the growth of a lot of these technology engines to not only become Saudi champions, but also Middle East champions and then emerging markets champions. So how we see the future is very optimistically. We think that there will be 45 unicorns, give or take, that this region is going to yield between now and 2030. We hope that a lot of these unicorns are going to be in deep tech and advanced technologies and AI and machine learning. We're starting to see trickles of this movement come in, founders tackling deep tech as a space, and companies coming up and doing AI and machine learning. Intelmatics is one of them, we're investors, and Muzan is another, and so on and so forth. You're starting to see a lot of movement in the space. And I think it still ties back into what we mentioned earlier. Every single sector we look at, real estate and prop tech, health tech, e-commerce, edutech, every single one of these spaces is ripe for disruption with data, is ripe for a new market challenger to come in and disrupt an incumbent that is not digitally savvy enough or is using data to make the right decisions. And it's just fascinating. I'll just give you one last example on the bits and atoms piece, right? Like you can do a lot of AI and data analytics and machine learning to optimize for pure bits businesses. But then even on the atoms side of the world, one of our portfolio companies, Flowered, is the regional champion when it comes to selling flowers and gifts. But what was fascinating to us is how they're using data against competition and to provide a better user experience to actually do their bouquet designs and customization using customer demand and what people are buying and seasonality. They're actually using a lot of this data of how much time users are spending online or clicks and traffic on their website to even negotiate. So they buy their flowers from Ecuador. They have people literally stationed in Ecuador to buy flowers. They have 5 days between, cutting the deal, cutting the flowers, shipping them overseas to Saudi Arabia. And that whole process, that whole value chain is actually being optimized day in, day out by data. So I guess to your question, everywhere we look, we see room to create a new market challenger who's digital native, who's looking at user consumption and optimizing for the supply, using data and creating a lot of market value. And we believe Saudi over the next few years has a very clear $100 billion plus opportunity to create technology champions.
Thank you for that. And for sure, for Flowered, I will remember every time I will order this example. And going to you, Dr. Furstenberg, how do you see the next wave from your own perspective in investments in AI and data?
Well, I think in Europe, I think the beauty about Europe is that we have built a lot of world market leaders across many different fields of, the process industry, the discrete manufacturing space, automotive, which includes some whole mobilities space, and then just everything that really drives the little nibs and knobs that are very deeply embedded in the value chain, and all of that is still very untouched by digital transformation. And I think the big, the big playbooks are there. If you look at the end-to-end big digital companies like Netflix or Amazon, everything is data-driven end-to-end, and it really depends a little bit on the sector and the space with regards to what the right timing is to really drive data into a process, right? And I think looking at the geopolitical situation, a lot of these big companies find themselves in Germany currently. Everybody is thinking about leveraging more manufacturing that is closer to home in order to avoid the disruptions they've seen over the past 2 years. So I think that is currently now really being a big catalyst and a big driver for a lot of these big industry champions to really embrace the data challenge and take that more seriously. Because a lot of times, if the sense of urgency just isn't there, you may have the right product and the right solution, but there just is very little urgency and adoption speed. And so right now we are seeing that really accelerate big time, and we're seeing companies that are really trying to tackle the problem from various angles. They're trying it with integrations into existing manufacturing equipment, for example, through retrofitting devices. They're trying to aggregate and get more accessibility towards deeper levels of their let's say stack to a certain degree, and then getting cloud connectivity going wherever that's possible. And so I think this is a place where we're just seeing a lot of new companies coming to market right now and really trying to embed themselves into that challenge. And I think a second theme that is coming more and more frequently these days is the whole space of federated machine learning, right? Like if you have data-sensitive industries where you really don't want the data to leave your premises, then federated ML, which basically means that you just aggregate the learnings from each individual site and basically abstract that away from the actual original data source, is something that is being embraced by a lot of companies. So I think looking at the timing and the general shift we're seeing, then these are two very interesting spaces where we see more and more companies coming up.
Thank you so much. Thank you for bringing the concept of federated learning, because it's basically it's tapped on the same concept of localizing the AI supply chain. And from this point, I would like to ask you, Mr. Harris, about how do you see also the investment in a platform that actually supports and facilitate the operation of AI and machine learning and data as well?
Sure. I mean, that is sort of what Palantir does, so I'll try to answer the question in a non-partisan way. But I think one of the main things, and I think is a common thread throughout this discussion, is that data is incredibly valuable, and there's a huge number of things that you can do on top of data when you talk about AI or machine learning or other things. But in order to do any of those things, you need to have a base of data that is homogeneous and useful, which it is oftentimes surprising, but is usually the biggest and hardest problem to solve initially. So to give you a small anecdote, we worked with a large multinational insurance company, and they wanted to figure out how to better service their customers in terms of marketing campaigns. And so they said, we have 54 million customers worldwide, and we really don't feel like we're getting the benefit out of these customers. The average contract cost per customer is, X amount. What can you do? And so we looked at all of the various data sets that they have. This is all, the most valuable data is always internal. There's this fixation that you can buy an external data set. Companies are sitting on the data that's valuable.
Exactly.
And so we came back to them in our first meeting, and this was one of our first private customers ever, so non-government customers. And we said, well, we have good news and bad news. The bad news is you actually have 29 million customers. The good news is your average value per customer is much higher. And what was the reason for that was because the data hygiene was all off. My name is Josh. My middle name is Alexander. If you had me in the system as Josh Alexander Harris, that was one file. If you had me in the system as Josh Harris, that was a second file. And so there was no entity resolution, which seems like a basic principle, and I'm sure you have the same issues in telco, because we see that as well. So getting all of that in order, while not necessarily as interesting or exciting as some of the other things that can then be built on top, especially what you're doing, is the sort of necessary part that we work on to make sure that the information is then democratized and is able to be useful. Because a number of companies and a number of individuals will come up with the greatest tool in each specific domain. And so, Airbus is one of our largest clients. We're not aviation experts by any means, but what we were able to do was put the information and the data into the hands of the person who is the expert. And to know that at the end of the day, if they build a tool, or if they build a predictive maintenance tool, or if they build a design tool that helps reduce fuel consumption on airplanes, all of which they've done, they're building it on the same foundation as all of their other tools, so you know that it's based on truth. Because one of the things that you often miss when you're dealing with data is it true? Is what I'm seeing actually valid? Right. So in the case of this insurance company, they thought they had 50x million customers. They didn't, but actually the news wasn't so bad because they were doing quite well with the customers they had. They just didn't know the individual number. So basic fundamental data consolidation, often led by data governance, so strong data governance. One of the things we see at our most successful customers is who is in charge. If you need a data set and someone says, oh no, that'll take weeks and months and it'll cost you $1 million to extract from this system or that, okay, who's in charge of that? Is there one person who can give you the answer? And suddenly when you have one person or two people who are actually in charge of all of the data sets and understand where everything sits and who the owners are, things happen much more quickly. And it's learning by error, but once you figure it out, and thankfully we're farther down the process than we were several years ago, you understand that knowing what data you have, knowing how to use it, and knowing where it is, all things that seem seemingly quite obvious are actually the trickiest part. And then you can move on to a lot of the more interesting and sort of dynamic things that we're discussing. But
fantastic. You've mentioned just minutes ago a concept that's called data hygiene.
yes.
If you could explain it to us, please.
Data hygiene is a different version of what I was just discussing. So entity resolution, data hygiene. Do you know that oftentimes what you would have, we work in oil and gas, you would get a report that was a static report, and by the time it reached the desk of the person, the decision maker, it was antiquated. So it was accurate as of when the data was removed from the system, printed on the PowerPoint, delivered to the big meeting, got in the boardroom. And so you were making decisions, and this is true of work in the Army as well, based on slightly antiquated information. So making sure that you understand the lineage and the hygiene of your data, so that it's accurate, that it's true, that it's up to date, which is also another big issue, is crucial if you're going to make data-driven decisions, which I think all of us understand the importance of. But if you're making a data-driven decision off of inaccurate or antiquated data, it's not a good decision.
Totally agree. So data management is one of the important aspects that need to be considered in any organization. And from this point, I'm going to ask you, Mr. Al-Faraj, about data governance and the AI ethics in general. How it is important to have this embedded in our operating model, and how can we really share these data and also maintain the confidentiality of the data generator?
So maybe before I go into the data governance framework that we designed over years, it went through a journey because it's a new topic, especially when you talk about data governance. The culture dimension and the ethical part of the humans that deal with data and the staff and the employees plays a very much important. It's not a technology protection activity that you can guarantee. The human aspects is a major factor for or a main cause of sometimes mistrust of data. So what we have done, we set part of our strategy to make sure that what we call the AI trustable and that's a major theme that we follow. And we focus on a lot of ethics, looking into the cultural dimensions. We made sure that we reach out across all of the employees that we have across the STC group and try to educate them into the importance of data governance and privacy, and how this is essentials towards the growth and customer trust, and how this is important as well into the growth ambitions that we have on the organizations. Now, speaking back onto the AI trustable is making sure that whatever algorithms or modules that we have designed are locked into specific objectives and try to avoid the misuse of data that you don't want to try to avoid on the taking it to the next level. Now, speaking around data ownership, we went into a very complex exercise which we define our data stewardship, data owners between technology and the business, and making sure that we have a very clear reference point and data quality measurements to make sure that we will be able to maintain that confidentiality and make sure that we adhere to the data governance framework. We built that framework, we got it certified from a third party. We continue drilling as we do penetration of cybersecurity, for example, to find specific holes. We continue that penetrations and ad hoc exercise to make sure that the people and whatever we produce out of these AI algorithms are going through a strong governance framework.
Fantastic. Thank you so much, Mr. Faraj. Just going back to the investment part to close it, and I would like to hear from you, all of you, if you would like to comment on this, about especially those who are having investors or investee experience. How do you see the main obstacles that actually stand in the way of investments in AI and data? I would like to start with you, Mr. Trabzoni, please.
So the biggest gating factor and constraint we have in the ecosystem today is talent. I think it's the common theme. A lot of our portfolio companies are doing a great job, building products, looking at data, hiring data scientists, and growing. And then the capping variable always happens to be just really good data talent, AI talent, software engineering talent, etc. So talent deficit is real, and this is a global phenomena, but it's even more acute in our part of the world. I think we're seeing a lot of momentum to fix this systematically at its roots. I'm very excited about how the region is now becoming a platform for talent attraction. People want to be part of the build-up story, and you can feel it. The energy is real, and everyone wants to take part and contribute. I think now the opportunity side of it is you're seeing this essentially deglobalization phenomena that's going on, where a lot of countries are now doubling down on their own data supply chains and localizing data and creating private sector friendly regulations to spur local innovation. And I think this trend is going to, if done correctly, spur more growth and help local talent, indigenous players, and the ecosystem to invest in its own assets and its own data and its own people.
Thank you for that. And since you mentioned talents, I would like to ask you, Mr. Jen, about how can we build the talent pipeline to make sure that we are training the right people. And I think you might have an interesting point of view from
If I had a solution to the talent problem, that would be wonderful. I think the talent issue is everywhere, right, around the world. I don't really have a unique solution to solve that per se, but I do think that to be able to bring different talents into the data game, I think you can solve this problem by trying to understand what is it that you are dealing with. Let me give you one example. One thing we always think about is what's the relationship between data and the owner, right? I think in the current, economic structure, the big companies, seem to be profiting from, personal data. I think in the future it could very well be that people are the owners of their data, and whatever money that's made, through app stores or whatever, should be, a big majority of that should be distributed to the owners of the data, as opposed to the platform that operates it, right? So my point is that, by looking at a problem a little differently, you might be able to bring more talents into the game. So a data problem is not necessarily just a data scientist's problem. You could use some more business minds to try to come up with a different perspective, to try to really understand and prepare your game in a different way.
So
right?
if I understood you correctly, you might anticipate that we should democratize the knowledge around how do we play with the data. Hence, it should be free and available for everyone to just come up with whatever.
That's my vision. Yes.
Very interesting.
I do, because I said, in the era of spatial internet, there's going to be so much more data, and a lot of the data is going to be so much more personal, right? For example, once I know your emotional intensity, and I can tell which part of the movie you enjoyed the most. I can tell which, during this talk, which topic drew the most attention. And we're talking about some seriously personal data here, right? I think it's only right that that person owns that data. I just don't think it's right for anybody else to make money off of that without the permission of the owner and not share the economic interest of that decision with the owner. I mean, that's just my personal view. Yeah.
A very interesting point of view. Mr. Faraj, if you would like to comment on how can we build the talents to make them ready for the AI and data economy?
And I think when I look into the talents, I don't think that this is a very specific problem that need to be looked at within the organizations or the institute. I think we are looking much more broader into the ecosystem, and this is something that we have started seeing it in the kingdom here, where there are a lot of focus from the government towards into what the production outcome that comes from universities out of the different programs that has been focused on AI and training a lot of people. In STC side, we're doubling down on training and development. We are doubling down on the way that we hire fresh graduates, get them trained, creating environments of innovation and empowerment of those talents, and guaranteeing them with a much more future development career will be a strong enabler to keep them in organizations. And I think these dimensions, we take it into considerations in STC, and we work with external parties really to make sure that we continue fueling. In STC, and I mentioned this to my team, I will never be upset or probably sensitive when I see STC producing a strong talent around AI analytics into the market, because I think it's going to be eventually and a strong enabler to the national ambitions that we have in the country.
I totally agree with you. And I think now we are going to our final stop. Let's reimagine data economy in the future. I would like to hear your own personal perspective. 1 minute, please, just for the sake of the time. Starting with you, Mr. Harris, how do you foresee data economy 10 years from now?
Actually, I think building on the talent question, and to answer you as well, I think it's twofold. I think one, yes, we need more investment in education. Yes, we need more students who understand computer science, engineering, but also we shouldn't discount the actual people who are implementing the work. So a lot of the work we do is in manufacturing, and technology has allowed tools to become much simpler. Like, if you look at the way my 96-year-old grandmother interacts on Facebook, which was a very complex tool, or uses her iPhone, that's not something anyone thought would have been possible a long time ago. So when we work in auto and aviation and other things, we have thousands of daily users on tools that would be perceived as very complex or advanced AI, but the interface that they're using is made so that they're able to use it with a few hours and weeks of training, and they don't need to go and reskill or upskill to university. They can do both. So I view the future of the data economy is much more democratized, with also the need for more leadership coming out of various regions and not just one town in California. But that's already happening, so I'm optimistic.
Thank you so much for that. Dr. Frisenberg, what's your view?
Well, I think I'm very much in Josh's camp. I think really twofold. And I think one thing we are seeing is the whole API layer, which is basically like the lower software layer, is really evolving and pushing to a lot of, in a lot of different ways and kind of augmenting people to a degree where I think the like say interface that people get is really as agile and as simple as possible. And I think secondly, one thing we really need to be mindful of is the children that we kind of now bring into this world, that they kind of still get a proper sense of what is actually the bits world, which one is the atoms world, and how do both interlink. And I feel like, you know, this first generation of internet users very much kind of fell into the bit space without really, you know, getting the proper delineation. And I think the next generation is probably going to have a better sense of that.
Thank you so much. Closing with you, Mr. Al-Faraj, about how do you see the view of data economy?
Well, basically, we start seeing companies evolving from industrial brands to digital brands, and I think lots of the companies in the future, they will be transforming themselves to be data-driven organization. And actually, and this have been seen on the recent market cap that has evolved in digital players. I think there will be more focus towards evolving AI, focus on talents, and there will be a lots of competition in the future. And in order for companies really to evolve and succeed in the future, they have to definitely transform themselves to make use of their data and other data as well.
Thank you so much. I think our time is off. It was really a great and informative session. I was really honored to hear these diverse, different points of view that help us to set the scene around data economy. I think we learned a lot today about the several examples on how the business models have been shifted, and also what are the main enablers for the data economy, and how can we see the data economy in the future. Thank you so much for coming today. Thank you so much for all the audience.
Thank you for having us.
Thank you.
Assalamu alaikum. Hello. Good afternoon, everybody. Lovely to see you. Welcome to the round table discussion.
Yes.
It's very friendly to do things in the round, isn't it? So
Yes.
there'll be no fighting here today.
No doubt.
A very warm welcome to all of you and thank you for joining me. I'm Rebecca McLaughlin-Eastham and this panel discussion will focus on the circular carbon and post-pollution future. So much to say and so little time. As you can hear, dinner is being prepared, so I won't stand between you and a feast for very long. So let's get down to business. The circular carbon economy framework, it obviously aims to create a framework for managing carbon emissions and moving us closer, ever accelerating us towards a cleaner, greener, brighter future. At least that is the hope. But what are the challenges and what are the opportunities that exist within that framework and also without it? I have an esteemed panel of guests, so let me introduce them to you. To my left, I'm delighted to say that I have Ziad Al-Shiha. He is the CEO of Saudi Investment Recycling Company. Welcome to you, Ziad.
Thank you, Rebecca.
Also welcome to you, Senator Norm Coleman. He is a former senator from the United States and he is now senior counsel at Hogan Lovells.
Welcome to be here, Rebecca. Thank you.
Thank you for being here. I'm also delighted to say that John Sampson is my right-hand man today. He is the Senior Vice President of Operations at Dow. Very welcome, Tasharafna. Thank you again for being here, everybody. I want to start with a broad brush question, just so everybody is completely familiar with who you are and what you do. Ziad, let me come to you first.
Well, again, glad and proud to be here and part of this topic, very important topic. My name is Ziad Al-Shiha. I'm the Group CEO of the Saudi Investment Recycling Company. It's a newly established company by PIF, fully owned, believing and practicing the talk basically on the ground, not only saying things about carbon economy and circular economy, but actually introducing this company and making it, giving it a huge mandate to help the recycling business and go from linear economy to circular economy. Previously, I was an executive with Saudi Aramco before I became the CEO of Saudi Electricity Company, and now I'm heading the group of Saudi Investment Recycling Company.
We're delighted that you're on the panel.
Thank
you
you.
for your expertise today. Senator, let me come to you. A glittering political career, and what brings you here?
So I'm the former politician. I bring a political perspective to this. One of the things I do, my pro bono jobs, I'm the chairman of the Congressional Leadership Fund. We're the largest sponsor, supporter, independent funding of House Republican campaigns, races. We will raise and spend this cycle $320 million supporting House Republican candidates. We're probably active at 425 seats. We're active in about 60 races. So on a regular basis, I'm looking at polling, I'm looking at data, I'm looking at what's on the mind of American voters when they walk into that voting booth. And energy is a big factor. Energy is, so you started out with saying, yes, we all want, we desire a cleaner, brighter, sustainable future. The question that gets raised is how do we get there? What's the cost of getting there? What's the impact on the path that we take? And so I'm bringing that perspective. And I'll say up front, I am a great believer in a circular carbon approach. Because to me, I think that's the transition that is most welcomed by the average working men and women who are deeply concerned about their income, about heating their homes, putting food on the table. So I'll provide a political perspective, because in the end, policymakers are governed both by what's the right thing to do and what's the politically allowable thing to do if they want to keep doing what they're doing.
It's vital to have your view. Thank you very much for that. Let me come to you, John.
Thanks, Rebecca. Yeah, so I work for Dow. We're a 125-year-old manufacturing company, and that started in Midland, Michigan, making bleach, oddly enough. That was our first product ever made. We now make many hydrocarbons, plastics, urethane foams, and a lot of other products, silicones. And so we're here because we understand the challenge of carbon in the economy, and specifically climate change. And we understand that we have a role to play in reducing aggressively the amount of carbon that's being emitted from our manufacturing assets. Along those lines, we have a vision of reducing carbon while growing our company, and we've got a 5-step plan. We can get into some of the details on how we're going to get there
And so that's my perspective today.
Yes, exactly. Not one at the expense of the other. Very interesting. Ziad, a circular set for a circular discussion. Let's talk carbon. Talk to me about the economic framework for it. As it's been mentioned by the Senator, people want it. They like the idea of it. What does it mean?
Well, if you go into, let's talk about linear versus circular.
Yeah.
What is linear and what is circular and why is it circular? Linear, if you just consume things and then you just get rid of them and they go to landfill, which means they will impact the environment, air, land, and sea. That is linear economy description. And I think the whole theme of this forum that we are in it today, investing in humanity, humanity, mankind needs lifestyle, needs hope for the future, needs that the environment of the future is better than the environment we live for our kids, that the environment of today. So circle economy is the answer, and definitely the future that everybody should believe in, help create and support big time. And what it means to all of us, humankind, is that it will create jobs, it will make resources to us more available, because all of the resources that we see are either being depleted or being getting rid of in a very linear way, irresponsible way sometimes. And remember, when they go to the landfill, they have only two ways to escape, either to the aquifer water or to the air emission. Both are so detrimental. That's why we say, bring it back into circular economy and don't emit it. And that is probably at least how I look at circular economy and what it means to the circular carbon emission or reduction of it. And you know, out of the landfill, we produce or we emit methane, and methane is 20 to 40 times more detrimental to the environment than the CO2. It's all greenhouse gas emission that impact our ozone and the environment.
Yeah.
So circular economy is the answer. Part of it is circular carbon and how we liquidate it and basically trade it so that we all be responsible in the resource management.
Yes. Senator, let's talk politics. Because if we all have, let's say, arguably a similar ambition to be greener, more sustainable, cleaner, smarter in the way that we live and consume and dispose, is the race to a greener future, the green revolution, going too fast? And could carbon be the answer? The circular economy?
So Greta Thunberg is not going to like me, but
well, then go
ahead. I think we're going too fast. So when California says they're going to get rid of gas vehicles in 2030, that may sound great, but you know, if you're somebody living in a rural area and you've got your gas-powered truck, you may actually want to keep it 10 years or 12 years. And so the issue is not the goal. We have the same end goal. As I said before, it's the path that you get there. The beauty of circular is that it allows for some use of fossil fuels or other things, but takes that then in a way that limits the carbon footprint. It doesn't mean, and I'm going to give you the politics of this. I think President Joe Biden's political downslide, and it's a downslide. He's in some polls 40% now, not much above that. Yeah. Probably the least liked president of our time, which includes Donald Trump. They're at those levels, if not below. It began the day that when he took office, when he killed the Keystone Pipeline. He killed the flow of gas from Canada to the United States. That was jobs, that was energy, that had a tremendous effect. And so today, when one of the things that will result in a Republican control of the House of Representatives, and I believe most likely the United States Senate, is going to be because of the price of a gallon of gas, which is a couple bucks more today than it was when he took office. And the American voter is going to say, because when you ran, you said we were going to wipe out fossil fuels, that we're going to, and then they saw actions such as killing Keystone Pipeline, killing drilling in ANWR, killing leases for production on lands, extra regulation on the producers and the processors of fossil fuels. So the political dynamic, I don't think there's any question. Long answer to a short question. In Pennsylvania, which may be the race that decides what controls the United States Senate. One of the reasons why I believe the Republican will win that race, because the Democrat candidate a couple of years ago said he wanted to kill fracking. Pennsylvania is the #2 producing natural gas state in the country. Fracking is a major part of the Pennsylvania economy. That same candidate in a debate last night had to say that he didn't say what he said 2 years ago. He had to say, literally said, well, I support fracking. Why? Your question. Because the people of Pennsylvania support fracking. Because for them it's jobs, for them it's housing, for them it's food on the table, for them it's heating in the winter.
I wish we had more time just for a political debate because there's plenty to discuss, but not meaning to generate any headlines, I'll move on. But thank you so much for that, Senator. I won't ask you to weigh in on your political stance in this. I'll diplomatically sidestep, John, and ask you for your opinion about a framework, the advantages for your business, your country.
Yeah, so as a processor of fossil fuels, we have to understand the dynamics around how we can decarbonize and grow. Because we want more jobs, we want to put more clean products out, and our customers are asking for low carbon solutions. In order to do that, we've got a 5-step process to get our assets decarbonized. How big of a challenge is that? We've got 103 sites in 31 countries, about 36,000 people that work in our company, and we're going to decarbonize by 2050. More so, a milestone at 2030, we're going to get 15% of the carbon out by 2030. How are we going to do it? Well, scope 1, scope 2, which is inside the fence line, carbon production, we're going to replace assets that are high carbon producing with lower carbon producing assets as these assets come to end of life. Step 2, we buy a lot of electricity. 25% of the electricity we buy today comes from solar, wind, or hydro. So we're in the top 20 in terms of using renewable electricity in all industry, not just in manufacturing industry. Number 3, our products. So when you want to build a building, when you want to insulate a house, when you want to make an EV, when you want to lightweight a vehicle so it makes less carbon, all those require products that can make those things happen scientifically. Dow has the solutions there, and so our products help enable a lower carbon economy. Scope 3 carbon emissions are really all about our suppliers who bring raw materials to us and our suppliers who take our products to our customers. That's actually our biggest challenge. That's 2/3 of our carbon as a company comes from raw materials in and products out to our customers. So we've got it figured out inside the fence line, and now we're working with a couple of hundred suppliers to figure out how we're going to get their carbon solutions down so that we can get to net zero by 2050. And then lastly, this won't happen without innovation. And we're really heavily focused on innovation to really determine the next generation of technology that will take us down to that next level. We see it clear through 2030, but 2030 to 2050, we're going to need innovation to get us there. So we're invested in things like fluidized catalytic cracking dehydrogenation that takes propane to propylene in a much more low carbon fashion. We're looking at ethylene dehydrogenation as a way to reduce carbon when you crack into ethylene to make polyethylene. And lastly, I'd say we're really proud of our work with X-Energy, and they've developed a intrinsically safe, small modular reactor that can make high pressure steam, something we need in our plants, and also electricity. So lots of interesting things going on that are going to get us to net zero by 2050.
You have a busy few decades ahead of you.
Yes, we do.
Okay. In terms of innovation in the field, going into the next generation technology, not least, is there enough investment being plowed where it needs to be?
We think there always can be more. We've heard a lot of discussion here at the conference this week about the investments that are going into more sustainable solutions. We personally are partnered with Shell to look at, one of the things we do in our plants, we do something called, we use furnaces. Right now we fire those with natural gas. We're looking at a way to fire them with electricity and do something called e-cracking or electric cracking. We're partnered with Shell to find out if that can really work. And so we're investing heavily in that because we know that's the real future. And we think others are too, but there could always be more for sure.
Thank you. Ziad, let me come to you on the investment side, and obviously the adoption of new technology. It's something that companies are doing year in, year out. Is there enough innovation here on the ground in Saudi and in your sector when it comes to the circular economic argument? And do you think this will ramp up in the years ahead?
Let me put some perspective about, since we are talking about investing in humanity. The world today produces almost 200 million ton of waste. Call it municipal, I'm sorry, 2 billion ton of waste year on year. That 2 billion, only 30% get recycled. The overwhelming majority end up being where? Either landfill or ocean or dumped in a very irresponsible way, where they become basically places where disease could grow, where infection can take us, God forbid, to unwanted places or situations. Now, this basically 2 billion that we talk about, I will focus on one portion of it, which is food. Today we talk about inflation, we talk about food shortage, we talk about so many things, we talk about starvation in Africa and other places of the world. 10% of the food that we consume today, we don't eat. 10%. Where does it go? It goes to landfill. What does it mean? In addition to wasting food and placing it in the right place for the people to consume it in a very responsible way, it ends up being emitted. This methane gets emitted. And if this methane out of the 10% food that we don't eat is a country, it will be the third largest polluting country after the two greatest economy, China and the US. Imagine that. Why am I saying that? Is because mankind, human behavior make a difference. We always think it is always far-fetched. It is always a new technology. It is always this or that. But at the end of the day, His Excellency, Mr. Senator Norm, he was talking about education, investing in people, right from the early stage, not to, for example, waste food, be able to recycle and do all the right things in order to be very responsible to the environment and deal with it in a very responsible way so that we prevent the misutilization of the resource or the emission unwanted.
Can I jump in?
Please.
I want to jump in just on the really critical points here, on what I call the micro-focusing. We had a conversation off stage about the habits in our country. You know, do Americans recycle? And John was saying, we do, but not as much as they do in Germany and other places. And so part of what Sia is saying is in addition to the big picture investment, there needs to be a focus at I call the micro level, that we simply have to do a better, and you know, I recycle. My wife, we recycle. I don't know if we didn't do it to the same degree 5 years ago that we do it today. And so how do you kind of change the psyche at the individual? Think about if you can change at the individual level, what impact that would have on a global scale.
How do you teach people to care?
Let me add one thing on technology. So food waste, big issue. Like you said, 100 billion tons a year or so of waste. One of the ways of extending the life of food is by the use of plastics. Plastics can extend the life by being an oxygen barrier, and so we can get maybe to 10% less food waste. However, that plastic needs to be made with zero carbon plastics, and you need to recycle the plastic after you use it. You can get that behavior going, then you really got something special.
My wife really likes a vacuum packer, by the way. You vacuum pack things, they can stay for a very long time.
There you go.
It should be on your birthday list, everybody.
Exactly.
I want to answer your question
game
back to the investment figures, facts and figures. So to put some perspective, that 2 billion tons, each 1 ton cost, or you could call it from revenue perspective, will attract anywhere between $130 to $190 per ton. So you can multiply that 2 billion times $130 to $200, and you can see the GDP impact and how many people you can employ. Let's take that global perspective and localize it to the kingdom. In the kingdom today, we can create not less than 77 to 80,000 jobs, new jobs that will feed into the economy, and not less than 120 to 150 billion worth of reals, so that we can invest in that circular economy, basically, so that we will not feel bad drinking out of a glass bottle or even plastic bottle, because we know that molecule is going to be recycled and brought to us back again in a very, very responsible way. And in that process, people having jobs, they're having very high standard of living because things are not dumped somewhere near their neighborhood or irresponsible in the desert or some places around them.
So much to unpack there, so much important information, Ziad. Senator, let me come to you on the education front. How high is awareness and education or even empathy with the cause that is at an overarching level the concern of government? And secondly to that, speaking to power, what policies, frameworks, additional incentives or otherwise need to be put in place to really make that circle spin fast?
So let me deal with the big picture first. Right when I was in the Senate, one of the expressions was "drill, baby, drill," and that was kind of at the counter to the folks who were saying, "We're going to get rid of fossil fuels. We're going to get rid of eating meat because that causes cows have flatulence and that impacts the environment, and we're going to stop air travel." And that's not going to happen. So the solution of a group of us was we call a let's do all. So let's do nuclear. Let's do geothermal. Let's do fossil fuels. Okay. Let's do windmills. Let's do solar energy. Let's do it all, and do it all ultimately in a sustainable way, using technology to limit the carbon and recapture the carbon. And so in the end, to me, that seems to be the kind of the political thing that gathers everybody. One of the challenges, one of the real frustrating challenges of education is make sure that we educate folks in a way that's not politically biased, that's not pursuing an agenda.
Yeah.
I mean, we have a divide in America today, and by the way, it's a partisan divide, Democrats and Republicans. And I say this I was a green Republican. We have a political divide because Republicans, Democrats will tell you the world's going to end tomorrow if we don't get rid of fossil fuels, if we don't kill that industry, if we don't do all the things that kind of limit carbon emissions. And Republicans say, we had that hole in the ozone, and that didn't happen. And then we had global warming, and that didn't happen. Now we have climate change. So there is a cynicism, and so in the end, let's do education, but figure out a way to do education that isn't partisan. Figure out a way to do education that educates people about here's the challenge, and then let's get to John's point, and what we see at this conference, and I'll talk about that later, is let's use innovation. Let's get smart kids to figure out ways to get us to where we have to go without tearing us apart politically.
But you have to have both, for sure. You have to have that political support and a collaboration with industry, because we can't do it all. Right now, the technology exists to decarbonize everything that we're doing at Dow. But once we get the the CO2 out of our process, we have to have somewhere for it to go. Right now, that's sequestration. We can't put in all the technology to take the carbon out and not have the government or partners put the pipeline in to take it off to a place to bury it in the ground. That's today's solution. That's not going to be tomorrow's solution. Eventually someone will say, hey, I'll buy that carbon from you. I got something to make with it. Then we really got something going. We're circular on the carbon. We think on hydrogen, that's going to be the next big fuel. It's kind of expensive right now, but with innovation, that will start to come down, and that will be a fuel that powers us going forward. Right now, it's a little expensive, but it's going to be an excellent heating source once we get the cost of hydrogen coming down. But it takes a partnership to invest in infrastructure. Right now, we're getting ready to build the largest cracker polyethylene zero carbon site in the world in Fort Saskatchewan, Canada. Why are we doing it there? Because the Canadian government ran a pipeline right outside our fence that said, put carbon here. And so all we have to do inside the fence line is decarbonize. We put the liquid carbon in there, they take it off and sequester it, and we can make a zero carbon site. Oh, by the way, we're doubling the capacity of the site as we do it. More jobs as we do that, and it's a win-win for everybody.
And we do not have that political consensus in this country, in my country, this country, in the United States.
Our country.
In our country, John. We do not have the political consensus to do exactly what he's talking about. And we do not have the political consensus to do carbon circular in our country. And so I think that's one of the challenges is for us to kind of lift up this concept of carbon circular in a way that can kind of generate a broader political consensus. But you do not have that in the United States today. You couldn't do that in the US today.
That's right.
if I had to put you on the spot and say when could it happen, what would you say?
I'm an optimist. I think ultimately that both sides got to get away from the extremes, because what we're really talking about is the middle here.
Right.
We're talking about, we want a green, sustainable, low-carbon future.
Right.
But we want to do it in a way that doesn't stop people from working, doesn't stop people from heating their homes.
Right.
Yeah.
And so we got to get away from the extreme politics. And unfortunately, American politics are base politics. So Joe Biden, I'm going to tell you, put in the Inflation Reduction Act a whole section on the Green New Deal, okay? And that was to motivate his green base to show up on a week from Tuesday, okay? That's not how you build consensus. And so somehow I hope that better minds on both sides of the aisle prevail and try to find this common ground that we're talking about in this discussion.
We very much hope so. We're rapidly running out of time, but I do want to come to each of you with a closing question. So many meetings here, so many fascinating people to press the flesh with and to have discussions with, from the magic molecule of hydrogen to circular carbon to the inclusive energy transition. What has been the most interesting thing that you have discussed with your fellow peers or delegates that you can tell us about at FII this year?
I think back to the theme and how it was opened. This forum was opened by His Excellency Mr. Yasser Mayan, and he mentioned something very, very important. He said, in line with what Mr. Senator was talking about, let's use fact-based analysis to draw and reach conclusions. Let's not reach conclusions and then work out backward, trying to justify why we reached that. So, to your point, Mr. Senator, it is the fact-based finding mission that we all have to do, because we are business people at the end of the day, and this forum is about creating business on a sustainable way. And the only way you can do things on a sustainable way, basically, is to have fact-based, and that is the discussion. And the fact that SIRC, Saudi Investment Recycling Company, we will be investing very, very dear money to address that circular economy at best. We will be touching 14 streams of waste: municipal solid waste, waste of electrical and electronic equipment, and also mining, sewage, medical waste, all kind of waste you can think about. So we'll be tackling them to pour them back into the circular economy. Today, the lack of doing that in the kingdom, only on the waste side, not the transportation or the power, is causing us 40 million ton of emission. If we do that, we take it back into that circular economy, we create jobs. Also through the calorific value that we are burying today, and that is either being emitted to the atmosphere or seeping under the ground, amounts to 24 million barrels of calorific value equivalent. So imagine what 24 million barrels can do to mankind. So we are investing. We call on our friends to come and invest with us. So I can say 1-800-CALL CIRC.
You heard it here first, free advertising in this forum, which is so not true. Senator, let me come to you. We want the facts, we don't want fiction. What's the most interesting conversation that you've had regarding our topic?
Well, I'll speak in the gestalt, kind of what this conference is all about. And it is all about kind of innovation, a better world, a place that more people can actually kind of lift themselves out of poverty. And by the way, the capital, because you have great ideas, but if you don't have capital, the ability to convert that concept into reality, it's worthless. And so this is kind of the place in which I'm seeing a brighter future. And what we're dealing with today is simply a part of it. But I do want to then also return to kind of my theme on this, because I actually heard it reinforced by Ken Moelis. He's one of the great investment bankers, and he made a comment in one of his forums on the big stage that we just need to remember how important affordable energy is to 7 billion people in this planet who seek to rise up to the middle class. Okay? And we can never, ever forget that. I think that's critical.
Yes, thank you. Let me come to you, John, on investor appetite. You need the capital, you need the money ploughed in. Is it there? What's the environment like?
That's the great thing about this conference. So many like-minded individuals. I see a lot of great collaboration happening here in the kingdom, and that's heartwarming for us. We have it in Canada. That's why we're moving in Canada. We see it happening here, and so it's really inspiring to see that. And I've had some great conversations about that. public-private collaboration and really coming together to understand that we can't do it all privately. We've got to work with local governments to be a partner in doing this, and that's what's really cool about being here.
Gentlemen, it's been an honor and a fascinating discussion. Thank you so much individually for your time. Ladies and gentlemen, please join me in thanking my panel.
Thank you.
Thank you.
Thank you. Thank you.
Yeah, for your pleasure.
Pleasure. Thanks.
Thank you.